All right. So today we had some crazy rioting, I guess, over the weekend. So this is the day following the rioting across the United States um, over the death of somebody somewhere by a police officer, and it was all unfair. So we'll take a look at what the markets are doing today and see if we can come to some conclusions about what's happening here. The very first thing to notice is that right off the open, right here, you see how decay went down. And then we have trapped orders. In fact, let me move decay a little bit. If you come over here and you scale this, see that I'm scaling? Now, if you hold down Alt while you do it, and then Control, so Control will slide it up and down. So I'm holding the Control key on my keyboard, and then clicking and dragging. Cool. Okay. So you can see the trapped orders there. So we have the trapped orders, which, if you remember, that is sellers getting trapped in to be used as liquidity, and we're using the signal and the volume together. And then you could see the bulls came in and hit that. I mean, they caused price to sweep. You could see the cash coming in there, and then take a look at tension. They hit and they impacted. So a big check mark. That doesn't look like a check mark. It's going to be check mark for the bulls. Okay, so it moves up. You can see it's looking. Finally, we get a signal here. We get the trapped orders, and I'm looking at that pile right there. See the signal first. You could look here, I suppose. And this probably doesn't make a whole big difference. Anyway, it pops up. We have bears come in and take a look. Did they hit? Well, there's a little bit of a move down, but overall, I mean, bulls hit, bears didn't. Take a look at tension, nothing. So what was probably going on? Well, we're looking at the counterplay here, right? The bulls to the bears. And then what were the bears doing? And look right here, tension was about to zero. The bears are looking at a zero test. So a lot of the times, if you're trying to participate in the market and you're about to pick up liquidity and the probabilities are like moving towards a zero test, it's a really good idea to just sort of move out of the way. And that's where you get that stepping out of the way concept. You step out of the way, let it just get to zero, because consider, if you will, this moving up will likely drive prices up, right? So moving to zero likely drives prices with it. And if you're a seller, you know that these prices, when it gets there, are likely going to be better than what you're getting now. So if it's coming down, you can see coming down to a zero test right there. The prices here are not as good as here. So if you're bullish, just conceptually, I'm not talking about this day in particular, just you want to let it go. It benefits you. It benefits you. Go ahead, let it move to zero. I'll get better prices. That's fine. So I think these bears are looking at this going, let's just wait for a zero test and get an idea of what's going on there. Now, we got up to the zero test, and I want to point some stuff out here. We have right here, again, it dips down, you see, and then here's that bullish volume. So we have a bullish sample here that was a check mark, and this one, there's trouble. So the bulls are not hitting right here. So they did not hit that up, but tension continues to rise. So the bulls have a position, and we can go through this like we do every day. If you start getting bored with this analysis, that's really good, because it's basically the same thing every day. Most days are the same squabble between participants. So I'll mark that here. I'm going to take off the left extension so we can kind of see. There it is. Okay, so that's, maybe I'll take off the right one because I think this is being synced across a bunch. So we'll get right about there. We'll say 33-ish. And then we could see the bears got a sample here, but they didn't hit. So, but that's the first place that they're going to be at. So we can mark right about, right in here. I'm going to leave that gray because they didn't really hit. So we just know there's some participants in there. There's a couple up here too, those bulls. But the bulls are now failing to hit. Well, they're impacting tension. You know, things are moving up, but they didn't hit. So the question you have to ask here, if you're a bull, okay, bullish, and you see a zero test, right? these zero tests can lead to aggressive responses by whoever was controlling it. So through here, the bears had control over 30-minute probabilities. So they could weasel their way in there if they wanted to. They sort of could say, and this is the whole point of controlling possibility space. Probability is really picking out one thread of a possibility space. If you have a whole possibility space, this big old, and you say, well, what are the chances we hit here? You're just looking at one thread in a whole entire possibility space, and you're asking, what's the likelihood of this little section here being the possibility space we land on? And so when they're saying, well, these bears are going to want to defend, right? Like they want to defend. We need to see this. So what's happening here? Why is this doing this? We had the bears fail. Well, yeah, they moved out of the way so that we could get that. And the bulls didn't hit. Well, why wouldn't they do that? Well, we just had a zero test. So that would be very unnerving. What the bulls and bears both like to do is at a zero test, you just step back. It's okay, well, what are you guys going to do? So that's what's happening. These bulls right here have stepped back, saying, it did happen after this went over, but still, I mean, there's a little window in there. This is a longer time frame. You can see that this came down and tested zero here, and you could kind of look at this as a zero test, though I wouldn't. It's a little too messy. So yeah, I take that back. I was wrong. I jumped on that one. Here's one, zero test. It could take a little while for those zero tests to work out. Let's just go way back. Here's a zero test right there. Fell apart, didn't work. Here's a zero test, fell apart, didn't work. See if we can find that actually works so I can showcase what I mean. Here's one. So the bears, they tried, but it was messy. So these are not an exact science. Here's one, zero test, and the bulls picked up. These are not an exact science. So what happens is as you get to the zero test, I wouldn't say random, but I tried to be a little, they don't always work. And it's not that it's working. The question is, should it? Are the bulls and bears, what are they doing? And in this instance for today, what I'm seeing is that the bulls have hit and the bears stepped back because they saw that, and the bulls waiting. So this move down, in my opinion, is sort of like the bears have had control here throughout this window. And this is their chance. This is their moment to shine. I mean, if the bears are going to come in and pick this up right here, right now, this is the moment for the bears to say, you know what, we want these probabilities. Now, what the bears are going to need to do, okay, if the bears really want to take control of this, because you can get things under, it could go, let me not use that. So the bears need to get tension at some point, somehow, to curl. Best case scenario, it looked like this. But a lot of the times they'll do something like that. That way the next day it can gap down and then they can pump. Something like that. They need to see tension curl. All right, quiz time for everyone who's been watching my live streams. How do you curl tension? I'm going to give you a second to think about it because we have a second here. How do you curl tension? Okay, I've given you time. If you don't want to hear the answer and you're still, that's okay. Next, you curl tension by liquidating somebody. So in this instance, they'd want to liquidate. So here's the bulls. Where would they liquidate? Where do you pick a liquidation? Well, it's not 1 point beyond the move. So just hear me say this. They're not going to liquidate right here. They're going to liquidate where they're wrong. So they're going to say, well, yeah, there's probably stops here, but we're probably not wrong until, I don't know, in my head, because of what I saw Friday. You see this move? I'd take 50% of that move. I'd move down to the 62%. I'm just using fib numbers for fun here. Down here, I'd say, probably not wrong. In fact, I'm probably not wrong until down here, legitimately. And since yesterday, I was able to take advantage of this move, and I was able to say this is a bluff, I make the assumption that I am as intelligent or capable as or more than the big players in the market. So they too did. I'm shorter term than. My goal is to trade with people who have the mentality of more than a day to a week or a month. But my objective is to take impulse moves. And an impulse move, you know, you have markets doing stuff, and then you see like this, it's like the first leg of a move or something along the line. So in yesterday, uh, for me and what I was seeing, I didn't think this was the impulse move. This was the impulse move for me, and I thought we had targets. You know, I think I got out like a little, or like here or something. So I want the impulse move, not the whole move. I want that initial impulse, and that's all I'm after. You guys deal with the rest. So in this instance, where would that be? Well, this was the impulse move for me anyway. Right here was that last bullish liquidity. And so I'd take that about halfway down there is probably going to be, so I'd say, well, you're probably going to be wrong about here, right? So we could stop some people out and go like that. But if we're going to do that, if this is going to dip down enough to try and turn this over, I mean, you'd think that the bears would be more aggressive. So, well, not that you'd think, I'm not trying to make a statement about whether it will or won't happen. I don't want to adjust that. The idea is, what will the bears need to do? So what they'd need to do, I think, is not just push a low. I mean, they'd have to probably push probably be like a three-legged, 3 sigma, which sigma has to do with, it doesn't matter. So I'm going to say three-legged move, probably something like this. You know, and I assume that these guys would liquidate something like that. And then you'd want to see this curl down. And some of the curl would be due to bears defending this, so injecting money, so there's money coming in. I would call it negative money because they're sellers. And you'd see that. And then you'd want to see right here, basically money coming in, but from losers, so same. So that's who I think is participating. Those bears are saying, hey, let's see if we can pull this off. And their target is to liquidate those bulls off the open. And the question is, can they do it? Well, right now, we're about face-to-face with that idea. Can they do it? Well, you see this decay is moving negative. Trapped orders coming in. So people are seeing a negative number, and that makes them, they get all triggered, right? Because people are snowflakes these days. They get triggered over easy stuff. So they get triggered and they click the sell button. And that sell button is knowable. We know that if we give them a negative number, they'll click the sell button. And that means we know that if you cause a negative number, or not even that you cause it, that a negative number happens, that you will be given volume that you can turn around and sell as a product. And that creates liquidity. They see the negative. So really what's happening is they're looking likely at some format of momentum, and anyone who has a little bit more advanced mathematical skills and wants a little bit more than just basic signal processing, and they say, well, let's look at some energy and decay and stuff like that. Well, then you're going to start seeing basically the energy in this is starting to look like it's moving that way. So first you see the energy, then you see the actual number, and then likely at that point you start seeing tension. You know, it sort of works that way. That might be a little too boilerplate, so much so that it's so common denominator it's not actually accurate. But for these two, it's pretty, not always, but typically you're going to see decay or the energy move, and then you see this start to move to zero. Not always, but usually. So that's what we're seeing. We're at 1%. You want that zero, or so this is like saying we're almost finished with the pattern that represents that there is filling at this time. Phone calls or whatever transactions are going on. I believe at this point the broker is calling up the trader, or sending the volume to him, right? It's like, here's some volume, that's an arrow. And the trader is saying, asking the question, do I want to pick up this liquidity? And we can take a look at the possibility space. Well, if the bulls pick up liquidity here, oh man, I mean, these bears, I think, are hopeful that this is maybe going to work. If there's shadow traders right here, I doubt they liquidated right here. They likely wouldn't liquidate until we got up to, you know, somewhere significantly above here. My opinion. So we could mark that out. Let's do that. I'm going to do that. I'm going to mark it on here. see if I go like that. Fire. So what is that? Okay, so if you're these guys here and you're seeing that your team is trying to control, I think the major place to liquidate would be there. First place would be here. So we're gonna watch as we get up to these levels to say, I think there's likely people who will unwind, their pain tolerance is gonna get hit. I'm gonna mark them red, not as sellers, as a place to get liquidated, because I'll mark red for both sides. So this is a stop loss, sort of trying to model an institutional stop loss, or I think they are. I think the bulls, you know, well, we could just use the overnight session, but I really like looking at yesterday's. So we'll say it's probably down here, but here. That's about right. So that's about where I was thinking. Maybe a little lower, but about here is where I think that the institutional buyers would start to unwind their position. Okay, so we're starting to get a picture here, right? You're starting to see a picture develop. And you know what I'm going to do? I'm going to save this as trader positions. Here we go, save it. And then come over to the default set and clear the drawing set. There we go. Okay, so we have trader positions right there. So now we kind of know where they're going to be at. Just a rough estimate. And we can sort of see, maybe I shouldn't color this. If I'm going to use green and red, I don't know, I feel like I should use like a different color, like an off cream. Okay, there we go. And then right here, maybe like a pink color there. It's not quite the stop loss. And there we go. Look at that. Nice, pretty chart. Gives us an idea where the players are. All right, so we have our bulls finished up their volume right there. Well, what are the bulls thinking right here? Well, I think the bulls are thinking, okay, we have a chance for the bears to come in. So I think this would be shadow bears, meaning they're anyone who tried to get in here may have the money to back up what they're thinking, but they're not looking at possibility space. So they're just sort of tailing. I'm a shadow trader. I, by definition, don't have the resources to be an actual. So I have to try and tail onto these guys. Shadow traders here, likely bigger players right about here at that zero. So maybe there's the first bout of volume. So we could say some people coming in, and what's going to happen is that these bigger players are really not going to do anything but help the bulls unless they can in some way liquidate these bulls, these guys, right? That's this stop here, or at least push this underwater. So bears would need to do this, and then that would probably look something like this. It would probably kind of stick to the status quo through this section, and then we'd trigger a lot of people's stops here, and then this section right here would actually, so it'd probably look like this, and then a little bit of turn, and then a curl. So that's what I would expect if we're going to liquidate these guys here. Now, if the bulls come in and they're like, hey, we're going to hit this, which, 43, so we're still looking for a sweep up here. If the bulls come in and they decide to pick this up, what's their goal? Well, they want to see tension continue to rise, and then we'd probably see prices go something like this, and then, something like that, and then you'd see tension curl at both of those spots. And that's why a lot of times I say if this accelerates, like you get this acceleration in a direction, especially in a direction, there's like this kickback that comes. And it really has to do with the association between the acceleration of tension and unwinding a bigger player, right? So you see in the game here, so we're getting some more bulls in here. So I could mark these. Let me just duplicate this. Can I just duplicate it? And I'll just go like that. So we'll say right now we're getting that to happen. There's a little bit of waiting here because it's like, what do you think's going to happen? And we've seen fail we've seen right here, so right here, a little bit of, we'll call it a negative check mark, a little bit of bears probably coming in. And you can see right there, there's also bearish liquidity right there at the 0. So that's good. So some bearish liquidity. And then we're coming down. And right now we're getting bears again. So you can see the bulls came in here. These bears have decided to hit, probably trying to salvage tension. These bulls come in just after they hit, and the bears are getting sampled again. And we'll watch this here. Now, this is a tense situation because we have two directions. What I think is important is that the bears have been in control of tension, but the way it's looking right now, it's like, well, look at, it's not, it's moving in a way that tells me that the bears are going to lose control of tension, most likely, unless the bears do something dramatic, which can cause this, which would mean, shoving this down. Unless that happens, they're going to lose control of tension. Best case scenario, even liquidating, they're going to get it to like here. Price could look like that or something. Best case for the bears. So if the bulls can let these bears get in and they can create a pile, they could liquidate them and get this higher. Push up through this peak here, the one that we're all like, oh, this is the mate. Well, I'm not saying that, but a lot of people are looking at that. Oh, get those major highs in soon, right? So face to face, this is a face. We got the bulls and the bears right here. There's like some bears right here, right? They hit, but they're not impacting tension. So from what I'm seeing, we're having bears struggle. They're struggling. I mean, they're really struggling to take control of this. We're not seeing them impact tension. Maybe a little. I mean, you can kind of see a little bit of character change. It's just like, but they're not impacting tension in a way that's gonna do anything. I mean, okay, so there's two ways you can impact tension. I mean, you can make the line change character, like it squiggles, like, oh, it changed a little. You could say, well, you did, or, it does, oh, it did a little. But the question is, overall, did you have, I mean, remember this hook here? Did you have an impact on tension, like where it was going, what it was doing? And if you're a big, huge player with an intent, like you're doing something, I mean, look at how this tension can curl and it can just move in a direction. And like right here, you could say, well, there was some impact, I suppose, but so there's two kinds, and you got to take that in consideration. There's a little bit of, I guess, felt, but they didn't turn tension down. They didn't do like a wildly successful job. That's okay. It's just about the future now. So the goal would be to see them impact it at least some. I mean, I want to at least see them slow this down to say, are bears selling? And if you're not going to sell enough to even slow tension down and it just keeps moving like this, those bears are going to run into trouble because they're losing tension. They're losing it. They're losing control of it. They had it for a moment here. They never got daily tension, even close on Friday. So they're losing control of both right here. And so they're going to have to do something dramatic. And I'm not seeing, do you see that? Do you see anything dramatic in that line? Does that look to you like that their impact is influencing tension in a way that's curling this, that's going to get tension down later on in the day? I don't see that. So these bears are having a hard time. They're face to face with the bulls. I think that, yeah, there was the bulls sort of failed here, but I think they were looking at this. So then we get it come back down, decay goes under, we get the trapped orders after that zero test, and they're like, all right, well, let's see what happens here. It looks to me like the bears are having a hard time. Okay, so one tool we haven't even sort of looked at is look at velocity. And so let's say that we're going to just mentally regress that and say that it's going to, keep going down in this channel. It could be a while. And this section here moving down could really impact prices, like prices could do. So it's sort of like it's there, the structure's there, but you can see that there's these like wild moves where when you get these directional moves, they tend to be a little tighter in the range, in the distribution of the line. They tend to be a little, and they tend to also catch your eye. This is just my experience. That when you're sitting here, you're looking at stuff and you're going, oh, okay, that you look at it and you're like, I can see that that's going. So a lot of times I'll draw the line on the top. Just, you'll notice it. And we haven't seen that really with velocity so far. It's not, this is it's a little wide. This looks like messy through here. So I'm not sure, but you need to keep your eye on this because if this starts to move towards zero, the pursuit of bullish liquidity can become a bearish move. You got that? The pursuit of bullish liquidity can become a bearish move. So this could start to head down to try and use the velocity number to pick up liquidity, and that could cause a move down. All right, so we're almost done with our buy orders to sample the bears, and these guys are face to face. What'll be nice about this for the bears is that now that we have a position here, that liquidating these guys will be a little bit easier. You know, something like maybe here or maybe even a little higher, but probably here since that's the first dip after bullish move. You know, if this moves down there, these bulls might say, this is trouble, and that could capitulate. So having that bullish position get moved up is likely helping the bearish case because it brings in where that they could liquidate the bulls. And we can mark that out. Well, so I'm gonna say back here. I think that looks. So then what will happen is now we got this capitulation concept coming in, where we could hit one and maybe turn the other inside out, turn their pockets out. Let's get this right there. I know, it's like, why do you even care about the details? I don't know. I just want it to look the way I want it to look. Okay, so you could see that, right? You can see the dynamic. Okay, the bears are done getting sampled. Their orders are finished. You can see some moves. So we're looking about 41. So we see a sweep down 38. You could say, all right, the bears are hitting. They injected money against those orders. They're seeing the price change as a result of that injection. The bears seem to have come in here, but they're still, this is the biggest issue, they're still struggling to impact tension. So now we got to see how they handle this. Are they going to be able to liquidate those bulls? Are you going to be able to do it? Can you take them out? Because if you can't, I know a couple of bulls who are probably going to wipe you out. So we're face to face here. We've got this a little bit of drama. It doesn't feel like a whole lot to me. This still feels a little tentative, but it is starting to get a little bit more complex. And the reason for that is we're not just going signal to signal anymore. We're saying, okay, here, we have this happening. We got the bulls coming in potentially. We're still seeing tension rise, but we didn't really see the bulls hit here, and the bulls didn't hit right through here. And this was probably the worst one. Now we're getting another where the bulls didn't really pop that up, you know, injecting capital, and now their stop loss is closer, so a little easier target. Now the big tell is going to be right here. It all has to do, can the bears liquidate the bulls? Because at the end of the day, you can sit in a ring and you can trade punches and you can dance around, they can fill here, fill there, but if that happens too much, and you've seen this before, if Decay did this, it was like sample, sample, sample. Trading punches just turns into noise. So at some point, somebody's got to land a big hit and take somebody out. Get an advantage. Get an advantage by damaging their position. And we know that these bulls are just a smidge cocky. We know that. Yesterday, they totally bluffed everyone. And I think that is, I just scooted that over. I think I want 50 bars. I need to make sure it's the same as this one. Otherwise, my charts get a little weird. Okay, that's going to yell at me. Like, I wanted to use 54. It says I wanted to use 55. Okay, fine. We'll go with 60. You complain, you're fine. This is my fault. I didn't, the way I wrote the algorithm just, it doesn't matter. Okay, so we're coming down 30. Oh, they got to 40, 41. So they're putting pressure on these bulls. And you might be sitting here saying, well, what are you looking for? And I'm sitting here going, I just see two sides of the market just sort of trading punches here. I don't see really good drama. I don't see clear, you're going to win, you're going to lose stuff. I'm not seeing that. I'm not seeing that at all. Unless if these bears can bring this down and liquidate those bulls, I'll say, look at that. The bears are starting to have an edge here, and they've hurt the bullish position. But so we're at like a medium. This is like medium complexity. And the reason for that is because you have to know about events that happened earlier today to understand the events that are happening now. So it goes up to medium. You get to high complexity when you need to understand previous days and stuff like that. The complexity gets really high because you have to understand how it fits together. In this instance, we're just looking at today, so the complexity from where I'm sitting, and you might have a different view. You might see some stuff that happened last week that's important to you. For me, I see this as medium complexity. Players just sort of doing the back and forth, sitting here waiting for somebody to do something aggressive. And one natural feature of this spot we're at is the longer that nothing happens, the further tension is going to move this way. And that implies, like right now, if the bears just slam the market, that's how far. But if they wait a couple hours, then that's how far. And if they don't do anything till tomorrow, so you can see over time, the distance and the effort it will take to get tension back to a position that's favorable for the bears is getting worse and worse. So having these players just sort of dance around each other like this is bullish. It's handing it slowly over the near term into tomorrow. It's handing it slowly over to the bulls. So if you're a bear and you see that, you might say, well, we can't do nothing because if we do nothing, we're losing control. We're losing this. We got to come in. We got to do something. So what are you going to do? What are you going to do? What are you going to do, bears? Well, I mean, their best option, I still think, is right here. If they get that, they could, the bear side could start to curl tension down and start to get an advantage right here. This curl, you need that. They need it. But at this point, it looks to me like this whole thing was a lie. Okay, not a lie. Let's call it a bluff. Because the daily tension was up, bulls never lost control of the daily probabilities. They had control of it. And the bears just got a minute. And it was just a dirty little dip. So that's what this is looking. The longer that nothing happens, the more I say, I think bears are screwed. They're super trapped in off of yesterday, thinking this was going to go all the way to the ES or the SPY equals $10. That's what they were seeing, and that's why it worked. So right here, we have, right up here, these people, the people who are trying to defend those probabilities. And hooray for them. I mean, these are the trailblazers. They're the guys who came in right at the top. The trend hasn't been established. They're trying to be contrarian after a big trap. So sure, you guys are trailblazers. Good job. Terrifying, because trailblazers tend not to do all that well. If you're gonna look at the distribution of how often they're profitable, but if you're gonna look at how profitable their profitable trades are, they significantly outweigh their losers. Trailblazer is somebody who does something like this. We have the market up. There's nobody else. They see something to come in and do something about. We have a little liquidity. I'd call these guys trailblazers. They are blazing the trail for the rest of the bears. And it's a risky position because there's no defense. There's nobody behind you. I mean, it's risk. And so they tend to do much better because they'll be near extremes and stuff. They're not always on the extreme. They're just near them. So if the trailblazers so much as the bears can't come in and work together and make this happen, they're not going to get this, and it's going to be a problem. So that's That's what we're staring down right here. And it looks to me like the bears like kind of hit there, tried a little bit, right? It's like as soon as that volume was done, let me scale this a bit. Slide it down. You see, as soon as that volume was done, or at least close, it slid down. I was like, or sorry, here. As soon as it was done, it popped down. So it looks like they hit. It does. You can see it looks like they hit. But failed. Look at that. They didn't get it. They didn't get it down. They didn't make progress. These bulls are just smelling blood in the water, as far as I'm concerned. I mean, it slid down there, and now it's back up. They needed to hit that, and they needed tension to curl. And look, tension, like those bears, they hit but failed over here. They did not get tension to curl down. They did not liquidate the bullish position. They are getting nervous. So what's going to happen through here? Well, what do you do when you're nervous? Most people, and I know what you do. I know what you do. I know what you do. You go like this. You sit and you look at your position. You bring up your trading thing and you slide your stop around. Oh no, it's going to hit me, right? You start running around. And I'll bet you that's the easiest thing to tell. You just look at the order book and you see the stop losses wiggling around a ton. Nobody moves their take profit. You just move your stop loss, right? And then you'll move your take profit up to break even. And you'll be like, okay, guys, I'll take a break even. But then it moves like a point in your favor and you take your take profit and you shove it all the way back down. And you're like, no, I was right. And you start moving your stopper up. That's what everybody does. It's just, I know you're doing it. So I think at this point, the bears are feeling the pressure because right now, these players needed this to happen. They needed that to happen. And if it goes up, we're going to be looking at liquidations, and potentially up to here. I think these two are going to be likely. And with tension continuing to move, the bulls are smelling blood in the water. This is looking like up, grind, destruction. So at this point, I think that the bears need to be very concerned. So Diddy in the Discord. I think there's a link to the Discord. You can join if you want to make comments in there and stuff. You can make comments on the YouTube too. The chat, either one. I have them both up so I can see. But he said he was surprised algos didn't kick in, and I completely agree. That was a good spot for those algos to kick in to try and liquidate those bulls. I think it's over. I think the writing is on the wall. It's these bears who tried to defend right here because of this, right? They're seeing this. They got some liquidity. They tried to defend. No impact on tension. So they hit and they didn't impact tension, which means they failed. So they didn't do it. And the bulls picked up liquidity this morning. I think the liquidity right here that they got, they just were stepping aside to see about this. Then they got liquidity again here. And the bears had a fair chance right there to do this. So I think the bears are starting to sweat, okay? So that's where we're at. What's going to come up next? We got to model this possibility. Let's model it. Let's take a look at what could happen. I think that we could do this. We could bring this down. I mean, if it gets up there, okay. But I think we could probably bring this down and say that any bears who hopped in here are probably going to liquidate here. Bears here and there. So we got some people starting to stack up there. Let's take a look at our, here it is. This one. You guys all remember this one? Let me zoom this in a little. You don't want to see yesterday none. You do. Look at that. Yesterday's inversion line is actually supportive. Anyway, we're not going to do multi-day looking at it. We're just, okay, so you can see we got 991 on today's right there. That's the high, just the day high, the day's high. Or you can just call it the high. And then you can see right here, that's where it's at in relation. So we would need to do this to invert the market. So there's some work to be done here. We get that up, we get over there, keep tension down, and that means people. So what does it mean if tension doesn't push a new high while ES rises? It means sellers are selling into the highs and getting churned out. It's a bleed up. because it slowly bleeds the other side. You say, oh, that's so graphic. It's like, well, you try it. You be on the wrong side and tell me how it feels to you. And you'll say, oh, bleed up is actually pretty gentle. Yeah, it is compared to the way it feels, because boy, does it hurt. So you recognize that. We can see that the bulls are smelling the blood in the water. The bears have had more than fair chances. Oh, and we're seeing interest rate ARB. Thank you, interest rate ARB. That's his Twitter handle. His name is currently Money Print Go Burr Capital. So I'm getting Jim has reposted his thing talking about a compression wave. That's good. Compression waves, there's a lot of ways to look at them. I generally think of them as when you have sellers, real sellers, they sell, right? And then buyers, and then those sellers think they're right, so they sell again, and the buyers think they're right. And so real compression waves in my head are essentially conflict between relevant players. And you can only compress so long before somebody loses. And that is important because it implies the scope or the size of the players. So how big are these people? Well, if they're compressing the market in any major way, they have enough money to push. And if they're pushing, that's kind of the way that I look at compression waves. So that's a good thing. That implies we have these opinions. Remember the ones that we're tracking? We're saying, oh yeah, we got the bulls here, the bears, this and this and this. And I think the bulls are winning. The bears are doing poorly. If the bears don't run an algorithm, if the bears don't just cheat, blunt cheating, stuff the order book across all the stocks, whatever you have to do, shove it down, get a huge, if they don't do something like that and they just sit here, tension's going to move against them, and they're minute by minute losing footing in control of the possibility space of the market. If you were to think of possibility space as like everything that could be positive, everything that could be negative, tension's sort of like moving this line down. And so as it moves up, well, really what it's doing is this. It's saying there's this over this, and that creates just a generalized probability saying it's more probable to be up, and it gives power to the controlling party. They say we can control the probabilities, we have control of that. So it's important. You don't want to lose tension. You don't. Losing control of that pushes you further and further away from being the controlling party, the dominant party. So just sitting here is just going to churn its way up. It's just going to move up. If those bears don't do anything, it's just going to move up. And so far, we've seen some problems. These guys failed. This was the shadow. I don't think they hit or anything. Probably some shadow bears showed up. The bulls were successful. The bulls have just been sort of waiting here. I wouldn't say that they lost on that one. I think they were giving them a fair chance, and tension continues to rise. I think the writing's on the wall. I think we're headed up. I think that this is going to look to liquidate these bears, to pump tension. And so right now the mentality is bulls pump tension. Okay, quiz time. How do you pump tension? How do you get tension to keep going when you want it to? How do you do that? Remember, it's basically the same thing as hurling tension. At this point, I think it's up from here. I think we're headed up. I don't think this is headed down. I think the bears have established they've failed. I want to make it clear. I want to make that really clear to you that I'm trying to not be ambiguous. How do you pump tension? You liquidate somebody. In this case, getting up here, pushing through their stop would help advance tension further and further. And we're at 15%, 15 here. If that happens and we maybe closed right here, what does that look like? Like 65% or something like that. If we close at 65%, that would be beautiful. Bears have lost control. They majorly trapped themselves into the lows off of, I don't even care what they were looking at. They majorly trapped themselves into the lows. So we have this sort of generalized who's paying for this rally. And if you were trading on Friday, and you watched the market, if you did not know what was going on in terms of what the players were doing or what seemed to be going on, you would have gotten shaken. There's no way you would have held. If you didn't have a narrative, or you weren't just crazy, or you had a longer term scope, like on a maybe hour bars or day bars, I think you would have dumped your position. I think you would have put a break even on there and you'd have lost your position, and then it would have taken off without you, and that would have been very frustrating. So you needed that narrative to figure out Friday. And today it looks like the narrative is almost just continuing what was happening on last Friday. The bulls went from bluffing last Friday to grabbing up some liquidity, and now they're continuing that liquidity and continuing trying to take advantage of the bears. Hopefully this narrative is making sense to you. I don't want you to say, oh, finally he came to some conclusive, he said things that were definitive. Yeah. I want you to say, I understand how you're getting to this conclusion. Okay, so we've got to this conclusion. Let's take a look at, hopefully you see what's the upside. The upside is we want to get through there, get through these liquidations, get tension as far as you can. Let's take a look at the bearish side. What do the bears have next? Can they get liquidity with velocity? Here's 0. No. Can they get liquidity? No. So when you can't get liquidity with either of those and can't even get liquidity here, it's a decay retest. So bears' last chance will be getting decay here, and then they could consume that decay retest, try and get a lower risk position, try and get the best footing they can tomorrow. I think that at this point, the focus for the bears is literally like, crap, are we already in this position? Unless something dramatic happens and changes the character of the market, yeah, they're already in this position. So consider to yourself, look at decay, look at how much motion there is, and then take a look at how much price has moved. Sort of compare them just in your head and say, okay, well, what's going to take to get decay to do something like that, up to do a retest? And, we might even see this kind of thing or something like that. We could see like a bullish test and then a move up. But I'm going to make it as little complicated as it'll probably be. If it just moved up, that's probably what it'll look like right there. That would be the last chance for the bears. That would be their, so in my head, the bulls, this is legitimately the scope. If the bulls continue to push and they get through those liquidations, like, then what's going to happen is at some point in time, they're going to run into a decay retest, and that's going to be the bears' last chance. And then if we get the sample right and it works, then the market could literally stop out the stops on that, use that as bearish liquidity, and they could get into that. It could be the bears just hit that and they consume it and it runs. Decay retests are nice for bears in a pickle because you can get a decay retest without really needing to impact tension. So this is okay. And we could see price move up, get the decay retest, and then see bears able to successfully move price back down without really needing to impact tension. So we could literally get to 65% and have bears do something successful today. And that could totally be how it plays out. I mean, it's still pretty early, so this is just preliminary. We're looking at how this works, and events can change. We still have lots of time in the day. Right now, I think it's the bears suck. That's what's happening. These bears are about to be okay, so these bears are about to have where they try to defend this here. This goes underwater, and that was it. I mean, that was it. That was their spot. That was their spot to get in. It's going to get ugly for the bears. I wouldn't let them out. I would just keep going. Just keep going. Don't move down. No back down. Keep going. They've had multiple chances to do something, and they've done nothing. So come back down. Don't do that. Just don't. Just don't. Okay, so we've looked at the bearish side. I think their best case would be a decay retest. Let's look at less obvious places. Where else could the bears participate? Well, let's say the market comes down, samples the bulls here, and they fail. And then it could come back and retest the bears here. Same with velocity. In fact, a move down like that could really bring prices down. Sample the bulls, and this is the switchback, sample the bears. That's the next place. I absolutely do not think there's anything they could do to cause this. There's just no chance. Not with the cards they've been dealt today. So that's the less obvious place they could see tension come down, switchback. That's a place that could be, but I think it's over. We're headed up. We'll probably get to 30.55, 30.60, 65 kind of thing. I think the bulls are starting to look up there and they're saying, "Whoa, what do we do?" Okay, so let's start talking about the fun games you play when you're in the situation and you're like, okay, I see it's going to head up. What do you do now? You get the counterparty to your trade. I should say your adversary, but we'll just call him counter. So you get the counter, the person on the other side. You get them to experience some hope, which is validate the idea with motion. So you'll see, like, if you sell here, you see prices do this, then you go, right? This little thing right here makes this person say, "Yay, I'm right." And then what they do is their stop loss sits here until the sweep down, then they go, "Great." And they move their stop loss way up here because they think that it validated them. They have the data point that is literally supportive of their position. And what's better than evidence that you're right? There's just nothing better than evidence. So I think that's the mentality. If I were a big, major bullish player right now, don't say that. Jim's over here telling me that this is going to flop. Okay, so this is the mentality. We have ourselves this group here, and some potential shadows here. Shadows, right? So these two, I think, are likely positions that are a little bit more legitimate because of the context. So what I would be doing is I'd say, how do we do this thing called optimize profits? And that's an S. Optimize profit. And essentially the way you optimize profits is you convince your opponent to take on more risk. Well, that's not true. You convince your opponent to feel nothing. You want to numb his ties to pain so that he doesn't feel that, and he becomes apathetic. That's what you want. That's what we do this every day. It's just all day, every day. So the goal here, I think, for the bulls, in the bulls' head, in their world, they say, okay, let's see if we can validate these bears in a way that gets them to say, I have data points that tell me I'm right, without really advancing their position. And that way they can increase that confidence, that overconfidence, which at the end of the day, the experience is hope. And the hope is, I'm right. So they say I'm right, or they feel this. I think this is an emotional state that they're sort of in, which is essentially overconfidence. But they say I'm right. They feel like it's all good, and they're validated, but no pay. So really and you know you're in this situation when you're in a position and you're losing money and the market just told you you're right. You see the market move in your favor, you see it give you data points in your favor, and what you should say to yourself is, I am in a losing position and I was just validated about that, and validation leads to apathy. It leads to, essentially what happens in this case of apathy is, this is you, and you're currently carrying this big old heavy thing called liability. And when you get too much evidence, you start taking that liability and you offset it into, I don't know, the universe or something. You offset it to the fact that you think it's true. So it's truth that screws you in this. I know this sounds really horrible, But you say to yourself, I am right and that is true. Therefore, I'm not liable. You don't feel your attachment to the liability. You have this really strong attachment and it's a lot of pain. But once that it's right, you take the liability and you offset it to truth or somebody else. It's scapegoating. You say they are liable. And so as that liability gets bigger and heavier, you feel nothing because you already offset it. You said it's already, I know it's true. And so you sort of offsetted that liability on the truth. And then at the end of the day, you get to do this really fun thing. Okay, you ready? You go, it was true. So whose fault was it? And you start trying to point at truth. Whoa. And it's really hard to at the end of the day, but that's what you're doing. You want to say, well, it wasn't my fault. And then you get to the apathetic state and you don't feel it and it slowly grinds against you tick by tick by tick and you feel nothing. In fact, at this point, because you don't feel the pain, you end up taking your eyes. I'm going to try and draw an eyeball. Here's an eyeball. It's from the side. So there's like a nose right here, right? And instead of looking at the pain or really the being wrong, because nobody wants to look at this, you cover that up and you look, if you're a seller, you look all the way down here at the profit target. And you say, wow, I'm so glad that I was offsetted my liability in such a way that I feel nothing. And look at the size of this profit target. And you can, usually the moment when you know you're screwed is that you're looking at a market which has moved, what, 30, 50, so 20 points, okay? And your profit target is a good 100% or more of the range. Way more than this, like 200 or 300%. Like your profit target is way, way, way out here, where on any other day you'd say that is stupid. But today, you know this is true, and you might ask yourself, why am I so convinced about this? And it's simple. You have suspended your disbelief because you don't feel any pain because you offset the liability. So what you're doing is counting your money. You're saying, I already did it, therefore this is mine. You start trying to do these things where you try to shove reality into places that you're like, it's going to go so far. I am so right. And you're offsetting liability. And the reason it's tempting is because it hurts less. People tend to do things that don't hurt. And so you get sucked into this idea that there's this huge profit target. And you're like, why did I believe that? And it's like, the question is, why are you so afraid of liability? Why are you so scared that it will hurt? You're so scared. You see one little price pop and you're ready to scapegoat all the liability of your trade such that you are now ineffective. That's the question you need to ask. It's not the profit target. It's why couldn't you carry the risk on your own? And that is the most difficult question. That's one that you have to answer. But that is the fundamentals for how this functions in real time. Why do I think that these work? It's because people do that. Everyone does it. So, yeah, I was reading what Jim just said about this being not a great hand for the Bears. So I'm not explaining that because I don't want you to take all that thought about how this whole process works and say this, knowing that process somehow validates the bearish side. I want you to take that process and say, do I understand it? I mean, have you been through it? Because if you haven't been through it, you're not going to really understand what it feels like and how it gets to you. Because if you can really understand how it gets to you and how it works, then you can determine if it's working or it's not by watching. I mean, you can see. And the most important thing right now is that you have an expectation. You expect this to mess with the Bears because of all the events we've seen. So we're right up here, right at the backside of this original position, or the best position that was looking to defend this, right? We're right at the backside, right there, right now. And let's take a look at the tick. And the reason I'm doing that is because I anticipate this to invert. So look at the tick. We're down 384, still looking good. We just got to get over that. And then I think that at that point, then we could start looking at inverting the market where that you can let the market do the work. I currently think the bulls are still having to do a little pushing. But once we get over that inversion line, the bulls can step back and say, all right, we've invested the money and now let's watch you guys lift this for us. That's what I think that's happening. There's still a little bit of lifting that has to go on. And I think the lifting in this instance, right? The lifting by these bulls and these bulls. So the lift is equal to the fail of the bears, right? Like as long as these guys continue to just like they're just going to continue to lift, and then at some point it's not that they're failing, they failed. It's past tense, and then we can invert the market, sweep them out, pump tension up, get this going. It could be the slowest, most arduous grind into some format of a high at some point. And that's kind of where I think this is at for the bulls. In terms of like what troubles are going to come up, maybe some troubles that we might have for the bulls moving forward. I think that there's two main risks that potentially could show up trying to get this to set up or to work. The first is potentially, I don't see it, but potentially these bears have an ace up their sleeve, or I'm not sure that I see an ace up the sleeve. More than these bears could become more aggressive than you think, because you always have to remember the bears have the ability to shove the ES and the SPY down. You're not a major player if you can't command any respect. I mean, this isn't about subservience. This is about game theory. And it's not that the bulls are just completely dominating the bears such that the bears are helpless. It's that the bears could do whatever they want. And that's one of the first major risks right now, that the bears could come in and they could do something if they'd like to. Maybe they really want it. Like they just really want it. And at that point, we're going to have to move away from this, like, just let the bears do, see. It's been sort of casual almost, like the bulls come in, it's like drifts up to the bears, and the bulls and the bears. It's like, I don't know, it just feels really nice to me. Like they're almost being nice to each other. And so if the bears really want this, okay, pause that. We're getting a sweep down. Okay, we just saw that pretty aggressive move. So if you're sitting here looking at this, you're going to be interpreting this a lot of different ways depending on who and where you are. If you're bearish and you're here, your position's good. I mean, these guys are not quite underwater yet. If you're bearish here, you see that as validating, and it could actually play really hard against you. If you're bullish, this may scare you. Sweeping back down after what looks like a retest of the highest expansion bar there could make you nervous. Now, my expectation is that the bulls are slowly doing their thing, trying to make this work, and that this sweep down should stop, make its way back up, and that sweep right there is going to be validation, or better yet, I can spell, evidence. So they're sitting there, oh, I know what I'm doing. Now I have evidence that I'm right. So that's very helpful. We haven't quite got those bears underwater yet, so that sweep down should make you a little nervous if you're bullish. It should. If this had churned its way up to like through a new high, I'd be like, don't be nervous, because then we'd have had this position underwater. But at this point, this position's not really underwater, so you'd be a little nervous. I think the objective here is to validate those bears, slowly churn it up, get them to put too much on the table, and then take that. So that's the way I'm interpreting this, because it's my expectation. Based on what I see happening. They expect to sweep down, validate them, slowly move it up. And at this point, if that's the case, we should see stops that would maybe here start to get scooted up to here and here. And a lot of people start going, oh my gosh, it's coming all the way down to here or way down to here. You start seeing these really distant profit targets, and that's the way that you can kind of see that working. Is it? Yeah, re-rise all in. If we get them all in, that'd be evidence is great. It's such a tricky thing. You get evidence, you got to be careful that you're not using it to make yourself biased. I think bears are. I think this is headed up. I think bears are about to get learn a lesson, pay for college, pay for the schooling which they're about to receive. That sweep came in right as we tested. The Bears have already shown us failure. The Bulls haven't. So that's, you have to recognize, you have to have a healthy respect for the fact that the reason that the Bears are the Bears is because they have the capacity to do things like totally wipe out the market if they wanted to. Otherwise, you're not really a threat or anything, and there's no reason for me to track you. You don't matter. You produce no risk. Without risk, there's no growth in the market. So, okay, so we got our sweep down. You can see it moved mostly back up. This just looks like it's meeting that expectation. We validated those bears. We let them know, hey, buddy, here's your evidence. You're right. Good job. So the bears can now take that evidence and they can shift the liability off their shoulders onto the fact that they believe it's true and feel nothing. So this is where I think we need to start seeing this start to play out. Got to get up over that right there. Just come on, get us over the 48. Come on, over, just up over, get that inversion. Don't bring the tick up. I don't want to see a new tick high. In fact, I don't think it's completely unreasonable to use yesterday's. You could see, this is just, you could see price was responding to it, and it's, above here. If we blasted both of those, that would be a great place to take profit, unless you have some other. If that happened, we can get this up. We can make that happen. That would be something to keep your eye on. If we get the tick to just blast up there, I'll put that right here. Zoom in. Okay. Gold. I think gold, I think there's a genuine concern the US dollar is going to crash. I don't think it's legitimate, but I think it's genuine. And I think there's a lot of people who are saying, if you go outside and you see the rioting, the crazy rioting, it gotta feel like the end of the world. It's just, like, I haven't personally seen any. I've seen little clips and stuff like everybody, but I could see demand for gold right now because people are going, it's over. It's over. And that's absolutely a way it could easily feel. I think it feels that way, but I don't think it's quite justified yet. I think rioting and looting are stupid, but I think it means the world's going to end. If anything, the insurance companies are going to have a headache. Anyway, so yeah, I mean, there's not golden guns. Better yet, get gold guns. Just two birds, one stone. Okay, just a second. Just a second. Keep your eye on that. Watch for the move up. Look at the inversion. We're headed up. This is blood in the water. There's blood in the water. Okay. All right. Volume back up. All right. So not much has changed here. Tick still same spot. So we're in this spot. And I think it's really important that if you're long and you're saying, well, this looks bullish to me. I get a lot of reasons for this to go. I think it's really important for you to at this point start to move away from data points. And I know this is the scariest thing that I say, I know. And you start to ask yourself about wherever that you ended up getting in. I think the best spot was probably right about here because of the, the Bulls, the Bears didn't quite, and it started to become pretty clear. You could have bought this morning. It doesn't matter. What you need to do is look back at the time when you got in and ask yourself what that person was wanting and expecting. Start comparing all the new data points to that person's ideas. Your goal is just to say, is this doing what I wanted? Is this doing what I wanted? Is this doing what that person wanted? And your job is just to say whether it is or it isn't. And if it's not, and you're not getting the things you expected, then you could say this is no longer working, and you hop out. And it's a trust thing. You got to trust that you were smart enough to make a good decision, because you're going to get faced with those counterpoints. Like if this is going to move up, you're going to get faced with counterpoints, and they're going to make you nervous. And if you don't have the trust to deal with those contrarian data points, you'll be tempted to make the biggest mistake of your life, which is getting up and walking away from your computer and believing that not watching is somehow better. And that's the same problem the Bears are in, isn't it? It hurts. It's like, oh, I don't want to watch this. It's too painful. You're doing the same thing they're doing, which means that tomorrow you will be them. You're offsetting your liability because it hurts. Because you're like, it's true. So don't. You need to do is say, what is it that I was expecting at the entry of this trade, and constantly be comparing it, and you're moving into a trust area. And the reason for that is because you don't know who the guys are on the other side of the trade, and they don't know you, but you guys have to work together, because if they don't do anything, you're screwed. So this is that trust zone where you start saying, what did I want? What do I expect? And you're sort of putting this all together, and you're monitoring this trade in a way compares the market to what you were looking for. And as long as things are meeting expectations, and you need to really understand what your expectations are. Up is not an expectation. Expectations are built around what counter signals are you going to see? How do you expect it to look and move? What's happening? What type of movement? Is it a sweep? Is it a grind? Is it going to trick them, trap them? Is that the end? You need to figure out what you were looking for and trust yourself. And then you can totally. Ooh, Volti ticked up. Okay, so Volti, so VoltiWap, what's useful about this is it tells you impulse, counter move. The impulse, it's solid. You see it's colored. And then the counter move is where it's a little darker in the middle. And it basically is saying, here's the impulse quantitatively, and here's the counter move. And markets are built on impulse counter moves. And so seeing this move up, it tells you that some volume happened. Not just volume, but volatile volume. It's important because a lot of the times you'll see this. I mean, you could see like last night right there in that bar, it ticked and second break. But I think in this instance, we're looking to see these bulls shrunk, get a push. So hopefully we don't have to deal with a whole bunch of trouble here. And this VoltiWap ticking up is helping us see that volume is happening farther and farther and farther. And this is going to be a more sustainable move. But this is a spot where you need to keep your eye out, because if the Bears just dump their position prematurely and they don't want to take a loss or something, it would cause that. They don't usually ever do that. That's typically an overnight thing to see it move until VoltiWap ticks and then come overnight because of the way overnight. So in this instance, it looks like we're going impulse, counter, and starting up an impulse move again, hopefully. But you need to keep your eye on this because of where we're at and how, having this tick right at the high could bring that in. So your risk has just come up. That's what we're seeing. Looking at the decay, we're getting closer. Look, there's the high. We're getting closer. All those bears, that's going to be their last ditch effort. Anything other than that, if bears shove this down right now, what they'd be thinking is get this down and sample from below. Get this down, sample. Otherwise they're just they'll just get turned over. Look at tension. We have like multiple bearish positions today. Look at tension. It's like, no. sell bears. You suck, as usual. So that's where we're at. I think we're seeing this volume here because of the tension, right? That's where our players are. I think these were probably the smartest traders for the bearish side today. They waited for tension possibility space to get to zero, good spot for them to defend. They waited for liquidity to show up. They hit that liquidity, but they failed to impact tension. So their hands were just too small. I don't know. They didn't have enough equity. So that's the best spot, I think, for the bears to have participated. And we're right at that, seeing this tick up. So you can interpret that. 116. So this isn't shooting up as we get up. We're leaning back here. You see that we're leaning back here, trying to test that inversion level. That's good. That's a good thing. That's good. Because I want to see an inversion happen. Inversion means it tests that and then keeps going, and the yellow line doesn't follow. I think that I'd love to see that. You want to see it push over, get a test, and then go and just go. That would mean the bears are just paying for it, and the bulls are just holding on, and the money's coming in. So that's what I think is going on. I don't think this is going to bounce up the highs. I think this is going to push through the highs. I think we're going to liquidate those bears, and then we'll take a look at the spot, what's going on there at that point. I think absolutely the goal here is to get these liquidations, get tension up, invert the market, and see how far you can get that to grind before we see some sort of blow off top. That's what it looks like to me is setting up. Love to see it set up. That would just be wonderful. We're not quite out of the woods yet. So we're just right on the edge. We're not quite out of the woods. In other words, this hasn't quite said yes. It's all coalescing into the reality that looks like it's laid out here. And we have these two things that could have happened, and the bears started to fail, and it made the probability of the bullish situation look much better. So we're not quite. I think we need to start to see. This inversion needs to hold together. Then I'd say much better. But I mean, we've got a lot of events here. I think behaviorally, it's pretty clear what's going on. I would not cover. I would hold this. I think this should blast through here in a minute, just because of what's going on. It's just what's going on today. It's just what's going on. So an interesting feature about this method of analyzing markets, for me, I think it was clear here. Hopefully that you can rewind the video and see that at right about here, I was like, okay, bears are not impacting tension. This is going up. So this is how much data I input before I thought this was headed up. And then this in my head is the trade. So one of the things you have to recognize is that there's no signal. The signal was the accumulation of all these data points and everything in here on all the charts. Me reading it correctly like a book. I read it. I understand what's going on. I know who is playing. I know where they are. And I take all this who, what, when, where, why, and I essentially land on understanding. I get I get it. So hopefully you could go back, watch, see how that all weaves together. There's not a particular signal. It's just how quickly and how well you can read this information. It may be that you're better at this and you can read it earlier. But for me, it was here. I think it was pretty clear. Maybe you could just say 11:30, sure. I was like, I think we're going to be liquidating these bears. We're going to be pumping tension up. So you can get an idea of how much work it took. That, and for me, that's the effort. You put in all this effort, and then you move into the trade mode, and you're trusting, and it's hard to do that, and it's going to work up. So you could see that there was work that had to be done. Now it's just wait. Just make sure you have your expectations here. You know what to expect at a price, where things are going, what's coming up. And that is the decay retest up here. That's the next event coming up in front of us. I call this an event liquidations, which should help continue tensions rise. You know, if this, that's terrible. If this continues, we could get to, I want to say 55%, looks like, because it's, you know, if we, like 55%. We get to 55%, that's a good position. The bears have lost complete control of the market. Another thing to keep in mind here, you're saying, but this is such a slow market, is that it's not just today paying for this, it's this. This is terrible, but a lot of people are taking and drawing fibs here, and they're saying 50%, oh my gosh, it's at 62 whatever percent, that this is 60 line. And so it's not that this is inherently bad. It's that if you're holding a short from here and you're justifying that hold because you see it hitting this, then what you're doing is your stop is, you basically just use that to justify maybe adding to a loser. And that's the wrong way to do it. You should never do that. So I think that if you're like, well, is that enough? I think we've seen a lot of activity. Shadows, there's a good 3 piles here. And 2 of them, I think, actually gave an okay go. Not amazing, not like super amazing. And then you consider this whole mess. So just to put that into perspective, who's paying for the upside? Is it just a couple people? And it's like, no, I think it's a pretty big group actually that's underwater, and they're looking at things and they have a real potential to get really hurt over this. So we'll see. We have lots of time in the day still to go about this. Look at that, still 59. So see that? See, we retested it and are trying to move away from that, see it get away, and it doesn't come up. Just keep going. That'll help. We can start saying, oh, we know who's paying for this. It's those sellers, they're coming in. So you start looking for the stuff that traps them in. One of the ways that you know that you're in an inversion without looking at these charts is you suddenly get this strange phenomenon. You get the sell signal, sell signals. Sell signals go up. Like you suddenly have tons of sell signals and price also goes up. So you have all these reasons to sell, and more, not just that you have a lot, it's more than usual. More sell signals than usual. It's just levels, this and that. And it's like all of a sudden you're just like, oh, I see a lot of reasons to sell. And this does 2 things. If you're long, you see a lot of reasons to sell, so you dump your position. If you're a seller, you might try to add or recatch something. And it's just a phenomenon that I noticed that your sell signal count should shoot through the roof. In other words, the things that make you think about selling or want to sell or just anything goes through the roof. And then you see the success is almost nothing. And you also tend to see something like this. This is sell signal N, right? And price comes into that sell signal, and its way out, you see something like this. And it's like, wow, that sell signal had this almost knee jerk. And then it just grinds against it. And then you get sell signal. The next sell signal. And then almost the same thing, or it does something different. Well, the point is that there's these knee jerks. And what happens is I think these knee jerks happen in it's like a 32nd of a second or something along those lines. And that can get you to say, oh my gosh, there's a sell signal. And what's interesting is that every single price, okay, this is an important feature, every single price was the high. So these are all the high of the day. So you constantly see sell signals at the high of the day, which slide, or they have that knee jerk out of them. And this is a case which is senseless because the high of the day has nothing to do with price at the high of the day. Like the low of the day today had to do with institutions buying into the lows and then picking up the pullback. The high of the day, there wasn't really one in place. So if you're facing this, where you have tons of signals and they're always at the high of the day, and it's obvious that this is obviously, and you're like, wow, this is the first thing that gets you to go, wait a second, this is inverted, because that's the experience. And I call it an inversion because you suddenly realize you need to invert your sell signals. Because at some point you're going to look at your chart and go, man, if I had just, maybe you guys have done this. You'll look at your chart and say, man, if I had just gone long every time I shorted, I would have made a bunch of money. Have you ever done that? Or that's the worst feeling ever. If you had just done the opposite of whatever you did, you'd have been loaded. And that's why I call it an inversion, because that's the experience. Wait, Jim, did you just post a guy that says, keep being fearful? I'm like, what? If the sellers are being fearful, that's an up signal, not a down signal, dumb. That's easy. That's like day one. Oh, are you seeing a bunch of, I see what you're saying. You're starting to see the tweets. Twitter's starting to open the door, saying, here, we're going to show you things. Your sell signal count just popped, didn't it? That's what happened. The sell signal counts. So this is an interesting feature, and this is a human feature that everybody does, is when you're losing, you start to try and tell everyone how right you are. And it's just a common feature. So the tweet count shoots up, and it's funny because when their tweets line up with an inversion in the market that's pretty clear what's going on, you start going, oh, you guys don't know what's going on. You're clearly not tracking institutional traders. You're tracking statistical signals, which are crap most of the time. If not, you should just say all the time, because the amount of times that a statistical signal is worth your time is more of an exception. It's like a special case. So you can quickly make deductions about people who pay. So that's interesting. So thoughts on the VIX? Let me take a look at the VIX. Well, so the VIX has been, I think the VIX got its face kicked in a way that's complicated. I think it had to do with introducing micros to the market. And I went over this a lot with, when you introduce micros to the market, you change the dynamic of risk in the market. And I think one of the big reasons that the VIX got crazy and has had a hard time resettling back down to 11 or something is because of micros. They introduced micros, and think about it. How many people do you know trading micros now? So then you say to yourself, well, a lot. I know a lot of people trade micros. Maybe you don't exclusively, but a lot of the time people. Then you say to yourself, okay, if you're trading micros at 1/10 the size, doesn't that mean ranges could be 10 times the size? So if everybody moves to micros, then ranges get 10 times bigger. And if ranges are 10 times bigger, that screws with volatility a ton. And that's why I don't think volatility is going to be heading back down to our happy 17, 15, 10 range, because micros changed the fundamental dynamic of the, it was like they changed the baseline for volatility. So I think what the VIX is doing right now is, more than anything, is trying to figure out what normal is. This market doesn't know what normal is anymore. It doesn't know, is a 100-point range big? Is a 20-point range big? What's far? At what point should the VIX just shoot up 20 points? We don't know, because we added micros and so many people trade micros. It's hard to know that correlation really well, and I think the VIX is going to have a hard time for a while figuring out what normal is. I think it's going to be a while before that settles down and we figure out what that is. Because right now, I don't really know. I don't actually watch the VIX at a closer time frame. I know a lot of people will look for the VIX push a new high while the ES did this or that. where's the ES in its range compared to the VIX in its range, and was it successful or did it fail? I know. I watched it in a longer term chart, so I'm always looking at this one. I have the VIX right there. And what this looks to me like in my assessment is that we just, got crazy. And now the VIX is trying to figure out, is this normal now, or is this, or what is it? So I think it's been having these range compressions kind of thing because it's doing that discovery process, trying to figure out, we've been right about here for a while. So maybe 28-ish is going to be the new normal on the VIX. But I haven't really been watching it super closely. I think subjective analysis could probably work pretty well, which is just relativistic. Did it push a new high or not? But when it comes to like using the VIX to try and get a sense of scale, I think even the VIX is having a hard time for a little while. It's this new component to the market. Once those micros got put in, which generated a bunch of unnecessary downside pressure in the market by inflating the pressure on the VIX right before, right in, what was it, last year? It created this unnecessary downside pressure on the market. I don't think the VIX is ever going to really go back to where it was because of micros. And the only reason I say that is how many people do you know that trade micros? It's like all the time now. And if people don't go back to the ES, then the VIX won't ever go back to 10 or something like that. So that's how I look at the VIX. I know you probably wanted a little more granular look at it, but I don't always do that. I actually sort of rely on it. Other people will make comments about the VIX, and I sort of consume those as data points, depending on who they are that's making the comment. Okay, did I switch? I did. Okay, there we go. All right, so again, I think this is the part where there's not a whole lot to be done. We got up real close right there. Right about to where we were thinking, they'd be sitting at, but here's where you look at saying, well, did that look like it pumped tension? Did that look like we saw a big shift in value as they unwinded their position? No, I don't think so. So still waiting for that to happen. Looking at the other expectation, which is this chart, you can see that we've got that inversion in place. So we're looking better at getting out into out of the forest, out of the woods, getting this to move up. So I'm feeling like this is where you should have a break even on your trade. If it falls apart now, it shouldn't. We're right up next to liquidating the bears. We've got our inversion in place. The bears have been pulled in. They got a couple of sweeps that got them overconfident. I mean, we've got everything put into place. It looks good. This is great. This is the time when you should put a break even up on your trade if you have a position that allows you to do that. And then to sit back and continually assess, is this doing what I wanted it to do? And how do you assess that? You need to figure out what your expectations were when you got in. And for me, that was about here, just before 11:30. And my expectations were to see this turn into an inversion. I was expecting some pops down to cause overconfidence. I expect stops to move, and I expect lots of people to suddenly be telling, or at least looking at profit targets that are enormous to the downside, as though that the world is going to end and the market's going to crash, which I think is crazy because I don't even know if the world ending would crash the market, to be honest with you. It's like if the world is ending, what are you going to pull out all your cash? Like, you're going to liquidate your account so you can run down the street while everything burns with dollar bills in your hands? If the world is legitimately ending, the stock market would probably go up because people would be afraid and want to turn their money into tradable stuff and try and put it in places that's safe. So they'd probably shove their money into the market because the world was ending, which would be stupid. It doesn't really matter because money has no meaning if the world ends. Just sort of sad. It's got this one overriding glaring dependency. The planet gets destroyed, our currency crashes. Or I don't even know if it would crash. I just think it would just stop trading. Nobody would care. Anyway, so all right, we're at 30.51. Now we're getting to that first liquidation. So this is the nice part where you can sit back and sort of watch these and you can, is this what you expected? Is this what we were expecting? Review in your, is this what we were looking for? Do we want to see a slow grind with pops? Is that really what we were looking for? Or am I just using, hindsight bias to say that's what we wanted all along, people? I was saying this since the beginning. Is that what I'm doing? Or is this legitimately like what we were looking for? Are we getting what we wanted? Am I getting what I wanted? Because really, you guys are just sort of stuck listening to my opinion. And I think everyone should have their own. I think, yeah, we're getting what we wanted. Tension. Gotta see that tension. Gotta see a good shove through and tension move. And then I'll say, there they are. Bears just got destroyed. We're getting closer. We're not quite there on this. I know it's behind there. It's sort of annoying. I don't know why Thinkorswim doesn't say, hey, you probably don't want stuff plotting behind the words, but I could see maybe one case where that was a problem. Anyway, we're getting closer. And remember, this is where the bears will get that risk reduction. So this is sort of in my head, the tentative scope, because this will be the next spot where the bears could potentially act. So if we get these liquidations moving and we keep that inversion running, this distance in tension, however it correlates, is essentially saying, here's the limits on the upside to the market. And once we get there, we start making assessments like, are they gonna take it? Are they not? How's this look? What's going on? And we could take a look at the inversion. Is that still in place? Is it not? Are we getting things working? We can make all these assessments when we get there. We could consider a worst case scenario. So one feature markets just love to do is ruin everybody's lives. And what I mean by that is that if you were a smart, patient, understand everything right, and you bought into the market right here, and it comes out, it doesn't take out this position, it just puts you underwater and then goes like this. I call this ruining everyone's, because you kind of have your cake and eat it too. The bears get to be wrong, but also take out the bulls and probably cover their trade. And then the bears get to be wrong. So they get to be wrong and they get to make a little money. And it feels like ruining everyone's lives because that's what it feels like. So if you look at yesterday, it was a pretty good example. I was thinking right about here that the market was bullish, and not to show off. I mean, it's to give you, so you had this really deep dish. I think I want pizza. Dip right here that you shouldn't have held through because there was some stuff going on. And then you could see right here, this sort of thing. So if you got in anywhere in here and you were very patient, you finally got it. It's like, and then it does this. So all of these hardworking people who've done due diligence, worked really hard, all through here. There's probably just tons of people. And then it took out, if they saw this and said, yay, and moved their break even up, this ruined their day. And then, you see what I mean? So worst case scenario, this comes down and pressures this group here. Likely not this group here. And then you see it pressure those people, come back up. Now, in this instance, you can kind of see the market was getting some bullish liquidity. And then we had right here, it gave us gave us bullish liquidity right there. So one of the features of ruining everyone's day usually is that there's some sort of ability to signal the market at the same time that you basically stress test everyone. So if this moved down, I think the move down would maybe be something like that. It could look like that would be, but usually you're a little closer to it. It's just right there. And if we just shove down and get that signal and take out that second, it's usually the second group, not the first group, the second group. Like in this one, we have the first groups here, second groups here. Though on a daily time frame, you could say the first group was here, and then this is the second group, and that everything in here was just the first group. But really, this isn't the first group if you zoom way out. So, but I'm talking intraday. First group here, second group here. You want to ruin their lives, and then so that's how ruining everybody's day works. Usually isn't this. I think the market is in a mode where it's trying to get this to keep moving forward with the inversion and everything. So at some point today, it looks to me, you could see this is sort of moving. This will probably change character up, down, I don't know, but it's likely at some point we get closer and then it starts to move sort of linearly towards zero. This will be something to watch a little bit later on, right here. And then it'll move towards zero, and that moving towards zero can have a lot of influence on the market. It's that moving into a position, and those can be hard to pick up on because if you're not watching for them all the time, you won't see what the market's doing. And if you don't have a context around it, it'd be really tough to make any conclusions or any intelligent statement about what's coming up or where the market wants to go. So that's something to keep your eye on. If this gets a little closer and maybe starts moving a little more linearly, like right now, it looks like if it just kept doing this, it would just, what is this, way out there, probably right at or past the close. So this will probably have to come down a little bit more and start giving you this kind of, where you're like, obviously that's moving towards zero. Pay attention to that. Decay doesn't quite do that the same. So I don't ever do that with decay. I'll do it with, you can see velocity. See, it sort of had this linearness to it, and then it shifted. And then it got back to that linearness, and then right at the end, a lot of times it'll accelerate. So you'll see something like that, and then it's almost like the exponential growth. Well, it's the logarithmic, where it's mostly flat, and then like that. So it'll look a lot like that. See how it's like. So this is not quite close enough, but keep that in mind as we move forward through this. Looking at the tick again, still good, still down. We have lots of, this could push up, but I got a hunch that it could shoving up and pushing through right here would be a great place to take profit on your longs. That would make me I'd be like, yay, structure. You can see with the VoltiWap that impulse counter, and we're getting little move, and this is starting to grind. So you should see in your charts, whatever you're looking at, lots of really generic reasons to sell, and it's always a sell signal at the high, and that's really hard not to look at. So you have to keep stepping back, looking at your context, asking yourself what your expectations are, asking, is this meeting my expectations? Is there something here that says my narrative is wrong? The story has changed. Something new has happened. Otherwise, I think since we're inverted, we've gotten these guys upside down. We're here. This looks to me like you could move your break even up, but I would. And that would say, I think we're in a place where this should keep going. And if it does dive, I think the objective would be to just ruin everybody's day. And it's possible. I mean, the bears can do that. So you don't want to forget that. But I think at this point, we've gotten far enough along that I think we should be liquidating those bears. If the bears don't liquidate, we should talk. If the bears don't, let's say price just keeps doing this and tension just never, sorry, I drew that wrong. Let's say tension goes like this, but price goes like that. And you're like, we never saw it pop up. We never saw them liquidate. Then what ends up is you have this problem because you say, why? Why did you get into a sell position, allow it to go so negative and never liquidate? And in those instances, you can start sort of seeing cheaters. Somebody knows something. That's usually what that means. We should basically get what we want. You should see them liquidate. Just moving up isn't enough. I mean, this is nice, but we're not looking for upward movements. That's a byproduct of the narrative. We're looking for bears to liquidate so we can see them get out. And we can say, I know who paid for this. I know where they are, in and out, both sides. It's not just it moved up and okay, cool, I guess I was right because it moved up. That's silly. If it moves up and we don't see bears liquidate, you should get suspicious. Why are these bears holding such risk? I mean, they're institutions and they have rules and stuff. It's not just straight discretionary trading, lose however much you want. Like, they got some basic rules, and that's why the liquidations and the unwinding works, is because they don't really like to be in big upside down positions. And yes, there are different sizes. It's not that all institutions liquidate 5 points underwater. Sure, but for the scope of this analysis, I'm looking for impulse moves, I'm looking to model impulse moves in trends, and I think that they operate at a small scale first and they move out from there. They start on a 1 minute chart and move out. The rest of us start on a chart and we stay there all day. They start at the bottom and they fan up to a daily chart. I don't think that they actually sit and stare at daily charts. Their analysis is different that way. Anyways, that doesn't matter. If the bears don't ever liquidate, you start asking why you're holding all this risk as an institution. And it's because the bulls see what you're doing. They're trying to push you out, but then you know something. And a lot of times that can be really telling. We saw that through here. The bears, we've seen this a couple times so far this year. I'd say we clearly have seen it like 5 times. I think I remember 5 times. But they just didn't let it go. And you're like, what are you doing? You guys are insane. And then it shot down. So if they don't let go, that can be a telling piece of information. The point is, at this point, I don't see a good motivator for bears to do anything. I mean, you lost this, you failed. If you push this down, it's pretty clear all of this effort will be turned back up. And if you can't push this down and dump all of that money that it cost, that money is going to turn from an asset into a liability really fast. So that's stupid. Why would you do that? This ain't no downtown loot people. No, these are smart, powerful accounts that can turn you over. So I think that shoving the market down right here was the wrong choice for the bears. So, I mean, well, think about it. If they push this down, what's the best they really could get off of a pretty decent? Maybe they liquidate these guys. They get that position to dump, and then what happens there? Oh, it's a curl. They're not gonna get this. They're not gonna get this down. Even if this went like this, like tension at this point maybe could get down lower, but it's not gonna. I mean, look, like, it's not gonna turn. So contextually, I think the bears are underwater. The best decision the bears can make is say, what can we do to get ourselves into the best position for tomorrow? And that's a hard question to answer since we still have quite a bit of today left. But the best spot I see is a decay retest. If they can get into a decay retest and start pushing things down, they might be able to get a little liquidation here, a little liquidation there. Maybe they could at least slow it down and say, okay, now we just have to figure out how to make this work happen, which means elasticity. And it might be good for bears to get that started. Elasticity, so is essentially like an elastic market. The bulls would let you bring it down to 0 so they can buy it. And they would say prices would do something like this, and they would get better prices to buy into. So the controlling party would allow, by no hit, no impact. They don't hit liquidity. They don't impact tension. So the bulls would step aside. They do nothing. And then the bears go, great, we can impact. So pushing this down and liquidating this position isn't stepping aside. No. That is pushing against them, and they'll probably fight back. I think the best thing they could do is try and get this decay to retest. If they could get that decay down and get some sort of sample and then see no hit, nothing into the close, that would be the best. And then price could move down, and then they could say, all right, well, tomorrow we're going to try and gap it down and see if we can continue that elasticity through the day. Best case, that would be the best thing they could do. So right now, I think the bears are going let's look at where we could get it. how high can we get this to go before we attempt to try and cause elasticity or see if it's there. That's what I think the bears are thinking. I don't think the bears are thinking anything else. The focus at this point for me is absolutely tomorrow. Like, this whole thing is done. It's for it happened. And I've tried to like talk about maybe conditions where the bears could potentially get this down and maybe a motivator for them, but I'm having a hard time seeing it. I think there's a much better motivator in waiting and letting it come to you and see if you get things in place to give you an advantage tomorrow. I think all the efforts by the bears right now are inverted. The more they do, the more it rises. And at some point we'll see this blowout. And that'd be a good spot to take profit unless you're trying to, I mean, if you held a position from yesterday, and you're trying to swing trade this, you might wait to see if the inversion can reestablish or something. But you're going to need a broader analysis. I think that this analysis prescribes that this can go up until the bears liquidate their position. And anything past that, you're going to need bigger narratives to look at. You're going to have to compare today to yesterday and previous days and take a look at more stuff if you're going to hold. So I haven't gone over that type of stuff at all today. We're looking at just the intraday here. We've looked a little bit at yesterday to get an idea of how things worked, and then the scope is just too small. So we're almost there. We're almost to that decay retest. See that? We're almost to it. So as we move into it, I want to bring up the wide short. It's a wide retest. Okay. Meaning it's multi-day. So it's a multi-day. So multi-day retest. And a lot of times they will first retest and then you get a short. So there's a short amount of time in here, a wide test, and then a short amount of time for another test. A lot of times they do that. So be aware. If you're going to be observing how this works, you get the wide test and then a little bit smaller test that comes right after a lot of times. The price can move pretty aggressively through there if you're not patient. And the reason that that's sort of a tough thing is because it's not necessary. So this could just do a single test and then take off. But I prefer the wide short because it does it so frequently, and you get price do stuff like this, and you're like, wow, I wish I'd waited for the second spot. It was perfect. And so it tends to be that your profits are a lot larger on a wide short, and your success rate, I think that's just what it does. I think it's because it's retesting from previous day, and then it's sort of giving you a little retest for the intraday, and then it goes. And then you stick the stop loss in your head. You imagine a stop loss just above the retest price for the seller, and then you know where their stops are. Okay, so we have pushed up through this first spot here. I would say that this essentially is done. And looking at tensions, give this a second to work through. Looking at tension and considering where's this going to close. You know, the tension line's sort of accelerating up, but it doesn't really do that. Probably going to go here. Yeah, and again, this looks like we'll get to 50 or 50, almost 50 maybe. Yeah, so we're at negative 25. That's counter force, right? This is the force. This is the counter force, or the tension that force creates. So this is one big force, right? This is a force. This is force. And that force is coming from wherever. And the counter force is how it builds up. So you can have a pretty decent amount of force here. The counter force isn't equal to it. So you just sort of have to watch and pick it apart and stuff. So that's why tension is negative when this is above 0. And you can see that the bulls have been pushing all day. So this is bullish force. The counter force that bullish push has caused is negative 25 currently. But it looks like we're getting to about negative 50 by the close. It's probably how much they'll have. So you can get an idea there. So we're at 53, and take a look at tension. I mean, it doesn't really look like it's curved up like you're not seeing a change in acceleration. So those bears have not let go, and they got through that first area that we were looking at, which is just a little bit above the highs there. The next area is going to be up here. And I honestly don't know why the bears or the bulls would ever stop pushing until the bears let go. I mean, they're underwater. They're dead. So I I don't think they shouldn't stop pushing until the counterparty folds. So I don't see any reason for this to stop. And I also think that we should continue to see the inversion stay like that. Just continue to run above. And at some point, boom, they'll fold. And if this just goes on like this into the close of today, I'd be like, you guys are nuts. Why are you so cocky? Like, what is it that you see that I'm not seeing that gets you to hold on to so much risk? One of the philosophies that I tend to trade with, just for anyone who's here and new, I like to stick to nice round numbers. I think that institutions, at least they used to, maybe with this new volatility in the market, it's different. They like to stick to around 10 points. I love to catch a good 10-pointer and then just be happy. You can get some good trades that way. You make enough that it actually impacts your account. If you're just looking for 5s and 3s, in my experience, you just sort of churn a lot. You end up with a lot of churn. You got to be catching 10s and bigger to really have that impact. So, if you were able to hop in here and you're looking at a 10-pointer and you're like, you know what? Not bad. You could walk away happy. I'm not saying you should. Just a philosophy that I totally believe in is you get in at the right time, you handle it the right time, and one way you can justify exiting the trade is just take a nice square profit. Don't go for more. You just say, this is done really well, and you just pop out and you say, that was a good day of trading. I'll be back tomorrow. That's a good philosophy, and it will sustain you if you can do it well. You pick out the narrative, you get a good entry, you do all your work, and then it runs, and you say, I caught basically the meat and potatoes here, and you jump out and you let everybody else deal with the stress the rest of the day. The point is, you did it right. So that's a good philosophy to hold on to. I bring that up because if you probably got in here, you're probably looking at like 30.42. And we're right up next to that, at the 30.52. If you hopped in this area here and you did get that, you could start saying 10 points is good. I'm happy. I'm very happy with 10. And I think institutions sort of think in 10s, at least they used to. I think for a while they're thinking in hundreds. But I think that's just really is a good chunk of change. Especially if you're doing more than one contract, you're going to be going, oh, my account is rising. And if you can have the patience to hold through and get what you're looking for, and you can do the trust phase and you can ride that to a pretty decent profit, you catch a couple of 10-pointers and you try not to make you try to be patient and stuff, you'll do well. The trick is to make sure you're patient enough that you get clarity first. You need to wait until you you get that. You'll understand what's going on before you get clarity. You'll say, I understand what's happening here. And you'll wait a little while. And then you go, I see. And those are different. I think I could say that I understood what was happening in terms of possibility space and stuff much sooner than I think I felt like I had some clarity going on in here. So I think I understood what was happening probably about through this area with the shadow bears showing up, bulls not hitting. I was like, I see what's going on here. And then it took till about here before I had clarity. So understanding and clarity don't always line up. But if you aren't patient enough to wait for clarity, you'll find yourself jumping the gun a lot, and you could churn out those profits, or worse, take a stop and then your brain gets frazzled. It's like you don't understand what's going on anymore, and you lose it, and then you don't take the trade, and you feel lost, and you lose your confidence and stuff. So you got to wait first for understanding and then clarity, and they don't line up. Oh, good. Jim's got a 30-minute strategy. He's saying that he sees a long setting up here for the longer term timeframes, and I really like seeing the lower. Well, this isn't actually low. This isn't actually a lower. We're not actually looking at 1 minute analysis. We're looking at daily charts, but it looks like it because we have stuff plotted here on 1 minute charts. But I think things start down small and they start moving up, and you start seeing things. You start at the bottom and you move your way out as things go in your favor. So we're seeing a move down. Tick is still where it's at, or it's still doing its thing. Move down here. I don't see liquidation in here, so I think these bears are still in their position. That's horribly drawn. Well, it's this one right here ish. So I think they're still sitting there. We still need to see a liquidation, a pop through. See this accelerate. We still need to see that. If we don't see that, start going, what the heck? What's going on here? Why are you guys doing that? Why are you guys holding on? I think if you got into a position and you're looking at a 10-pointer, just be, you could be happy here. Holding from here forward is going to tax more and more trust, and the complexity will rise. It's a natural part of markets as you get into things and you hold. So if you're emotionally taxed from holding this, and you're like, well, for me, getting emotionally taxed means getting excited. So you're in a trade that's working well and you're feeling too enthusiastic. I think for me, what's happening is your enthusiasm is exposing the emotional. Like, okay, so like I think of as emotions as you have a piece of knowledge that chains to a piece of knowledge, chains to a piece of knowledge. You get these strings, and then right here you have this gap. And I think emotions, that's a 3 for some reason. I was trying to draw an E. Emotions show up. There's an E. It's a beautiful E. And emotions sort of bridge these knowledge gaps. And so if you're getting excited, what's happening, I think, is that you're actually sort of losing the picture a little bit, and that your brain is compensating for that knowledge gap by injecting a bunch of emotion in there. And it's to help you feel like the world is sane and certain and safe. Without knowledge, without emotions, you are lost. So if you get too enthusiastic about a trade, a lot of times you can let that go, and it doesn't really matter if it runs or it fails or it was right or it was wrong. What's important is that you picked up on the fact that you're being emotional and you reacted to it before it hurt or paid you. And reacting to emotional states before there's some financial reason to do so is the only way, in my opinion, to train yourself to recognize when you're being emotional. If you wait for emotions to hurt you or pay you, you have been trained, and any training around emotions is detrimental, whether it was profitable or not. Your goal is to recognize you're being emotional and react to the fact that that bothers you, not to the fact that your emotions is leading to a loss. Of course that bothers you. You need to say, I don't like emotions, and exit the trade out of pure principle. And then you can actually learn something. And then the next time you're emotional, you may save yourself some money. And beyond that, you could say, well, why did I get emotional? Like, why was I getting so excited? What was I missing? And the thing that most likely you're missing is you're not valuing trust. In my opinion, this is the hardest part of the trade. This was the easy part. The hard part is getting into the trade and genuinely having trust for your past self, and genuinely believing that you're valuable and you're smart and you did it, and you know that that guy is good. He's good, he's smart. What you'll mistake trust for is profits. You'll think that because you did well, that meant you must have obviously did the dance right. Oh, I did the steps right because I made the money. And that's just wrong. You'll know trust because it is a heavier burden than risk. Trust is harder than risk. If it's not, you're not doing it correctly. You don't actually believe in yourself. You don't actually think it's real. What you think is this is the steps to the dance that you do, and you do that, and the money comes in because you complied, and you're trying to be an employee at a procedural job with somebody who's making money off your labor, and that never goes well in financial markets. You need to be the guy at the top carrying the risk, asking other people to labor on your behalf. trust hurts more than risk. It's heavier, it's harder, it's slower, it lasts forever, and it requires that you have proven credibility with yourself. And that is the greatest filter the market ever created. Was it said, you have to be credible and have integrity and a backbone and a character and be smart, and you have to believe it. It can't just be like a magic trick. You know, little kids will do that. They'll say, I'm so smart. And they believe these little theorems they come up with. As an adult, you have to be able to actually have evidence of this so that you can genuinely have that trust. Trust takes time. It's hard. It's scary. It exposes you in ways that you didn't realize. So if it's not harder for you, you're not really getting the point of trust. Trust enables large profits. If you don't trust yourself, you are incapable of catching a 50-point or 100-point move. You never will. You won't. And your experience should be something along those lines. You should be able to say, "Oh, I bought into the lows. Oh my gosh, I was right, but of course I dumped it early." And the issue here was trust. That's like the easiest way. I mean, unless it was that you got everything you wanted, but typically a lack of trust leads you to walking away from your computer, closing your trade way too early, getting scared out of your position at a loss when it was a winner, those types of things, all those things that are essentially humiliating. Those tend to be that you're mishandling your trust, and you'll confuse trust with overconfidence because you'll say, oh, well, trust is the tool that lets me shut my brain off. No, trust is the tool that ramps your brain power way up because you're constantly having to be two people and compare those and put it together and execute higher brain function. Overconfidence is where you get to say, I'm a smart person, and shut your brain off. If you feel it's easier, you're doing the wrong thing. You are doing it wrong. Trust is hard. If you've ever been married for any amount of time, you'll know that. It is something that requires a lot of you. And it's not something that happens to you. It's something you learn to do. It's a skill. So I think I've made that. So this is the phase I think that's the hardest. I think it's also the most interesting because you get to see all your hard work start to pay out and play out. You get to sit here and say, yeah, it's like we're getting the things I wanted. And this is where you start to get that credibility. If you were picking up longs here and you're seeing it invert, you're seeing that, look at that, the inversion's working. You're starting to, I'm a credible source. Oh my gosh, it's almost up to the decay retest. And I knew that back here and I got into it. Oh my gosh, you start to get these data points. And the next time you do it, and the next time you do it, and after like 10, 15, 20 times, you actually start to go, I believe myself. And it's not overconfidence. It's data driven and it's proven, but it's still, trust isn't something that happens to you. It's not that you're like, I'm so smart, I always am right. You say, I hate this trade, but I believe the past version of me who got into it, I believe in him. I trust him or her. And then you sit and, this is the hard part. This is the absolutely most difficult part that you must learn to master if you ever want your account balance to consistently rise in any meaningful way. Going up a few dollars here and there is just not meaningful. You need to be able to consistently feel like you're a real member of the trading community, that you matter, that you get it, you have useful contributions, and you have to back that up with money, hard, cold cash. And that money is a function of your ability to first understand and second trust yourself. So I say equity is trust. I think it is literally the like bond between people and yourself that makes money possible. It's that trust. It's not the understanding. A lot of animals on planet Earth have the ability to understand things, but we have yet to see anything even sort of close to what makes our monetary systems ever function at all. It's trust. And I think governments call it security. It's sort of like security. Well, not totally, but it's sort of like security. You lose security, you lose trust. They go hand in hand. All right, we're getting a pop-up. We're at 55.25, so we're getting to this spot here. So let's keep our eye on tension again. And we're getting to that point. You see the sweep up here, real good. That's what we're wanting, right? The pops. You see those pops up through. Take a look. The tick still down, so we didn't wipe out the inversion. I'm looking to see if tension can accelerate here, and at that point, you can say, there they are. Bears liquidated, it's over. And then if you didn't just take money and be happy, that's an excellent spot to walk away unless you intend to do something more. I think the objective here was to figure out who's right in this battle, how to beat the opponent, where that is, how that works, how it's going to function, who's paying, what are the mechanisms, and the mechanism in this is an inversion and liquidation. Those are the two mechanisms. And then to exit when we see that. And I'm still not seeing tension accelerate. So it moved up, sure, but bears didn't let go. Why? Why didn't you let go? You should have let go. So when I say bears, I mean I'm looking at these folks here. The ones who saw tension moving to zero, it got to zero, they got liquidity right there, and they said, we're going to do our best, and they failed. These are the guys that I think need to get liquidated, and it's pushing up against them, and we're not seeing acceleration, and it's like, what are you guys doing? Where are you going? Why aren't you letting go? You're insane. That's what I said. So we're just waiting. I mean, this is just the waiting game. I don't see that happen. So I think that this is going to be pretty painful, because if this was going on the last like 30 minutes of the day, I'd be like, okay, but we still have a couple hours. It's like, if you guys don't let go, I don't see why the bulls would ever stop. So if you see something coming in tomorrow, this is going to be a solvency problem. The bears are not going to be able to maintain their solvency into the insider information that they think they know. I'm not sure why that the bulls would let them out. Anyway, so that's where we're at. If you're looking for a 10-pointer, you got it. That was our 10-pointer that I think you could, at some point in there, you should have been able to grab a 10-pointer. And I think you're doing great if you can pick out this type of analysis and nail 10-pointers. You got meat and potatoes, and that I like meat and potato trades. You're not looking for the end of it. You're not looking for everything. You're just saying, I'm getting in when they're getting in because I'm predicting them, and they're going to pay me because I'm just as smart as they are, and they don't have a choice. Either I win and they win, or I lose and they lose, and they don't want to lose. And so you called it, you saw it, you got in. If you got your 10, I think you're doing great. We'll come back and do this again tomorrow. If you want to go until these guys liquidate and we see there's a possibility that may not happen. Sure, it's there. But that would be the next thing. We'll get that decay, and then we're going to be watching that. I guess it's up there in this chart. We're going to be watching the tick roll. So those are your choices, and it has to be yours. Make your choice at some point here. I think that this inversion is likely going to continue. And I think there's a feature here that's important, is that this market looks like it's very dead, but I think that there are a lot of bears underwater from Friday. I think there's a huge group of people who got a little too enthusiastic about all the things going on or whatever. And I think we can see that intention pretty clear. And the way it played out, I think the bulls bluffed the crap out of the bears. So I think there's a more upside than people realize in this, quite a bit more, and so this is where the complexity gets higher. I'm starting to make statements about where I think this could go based on how yesterday played. So it's moving outside of the scope of most of the analysis we walked over today. Unless you were here and watched the stream from Friday, then that really doesn't apply to you. But I think that there is a decent amount of upside because so many people got duped by yesterday's bullish bluff. And it's going to hurt. And it's not coming back. It's not coming back. Too much money. Well, maybe it comes back down a little bit, but it's not going to let people. So still looking for that liquidation. That's the next event to watch. Decay retest, liquidation. Decay retest, liquidation. That's what we're waiting for. And after those events, then I'll probably think velocity will start looking at coming down to zero at some point somehow in here. So I think today's been pretty good. Hopefully that I've been clear enough walking through this analysis that a lot of people, anyone watching, I don't actually know. It says concurrent viewers is like zero, so I don't know. Hopefully it's been clear enough that anyone who's followed along this is assisted in understanding how to use whatever tools you're using. Hopefully, that we were able to get a clear picture, see what was going to happen, and you can take advantage of it. The whole goal here is to get that narrative so good you can take advantage of it. It's not to sit and listen to me ramble. It's for you to see what I see so that you can take advantage of it in your own special little way, whatever that may be. For now, I think this is just a waiting game, so I'm going to take a break. I'm going to eat some food. I'll be obviously glancing over to make sure numbers still look anything crazy happens, but I think this is just a waiting grind. Keep your eye on the tick. That's a thing to watch. I'll be watching that tick. See if that tick blows out. That's going to be a big deal. It's either going to reinvert or reverse, and it's usually pretty clear which one's going to do right after it does. Otherwise, watch for the blowout or the liquidation tension curling up. Okay, I'll be back in a couple minutes. I'm going to grab some food. Okay, so we're getting that next event that has been looming in our future for a while now. The decay retest. You can see we've got our wide sample here. So the wide, I'm going to move this a little bit so we can get a look. You can see that wide right there. It was able to hit, and you see all this volume. So there's trapped. Some buyers came in, and there was some volume back there. The next step for a decay retest would be, of course, new lows that show up here. So wide short, remember that's a thing that happens. So you have to keep that in mind as you look at this. The other thing to keep an eye on is that we had some pops up, and there was another little pop up there. Still not seeing these bears let go. So what is it that they're seeing? Now at this decay retest, it may give you pause. You have these bears here who are willing to hold on to extra risk. And so you got to ask yourself the two questions with the decay retest. A, do they have other options? And no, they can't get liquidity with any of the other tools here. And B, do they want in? And I'm kind of thinking maybe yeah, because they're holding on to this position. And what are you guys holding on to that for? So that's something to consider that you need to think about here. It's like, do they want in? And we could interpret it to mean, yeah, they're wanting in because they're not letting go. But I have a hard time thinking the market's just gonna let them do this. I'd really like to see maybe another push here, see what we can do with the tick, which is still together. The inversion is still together. This is getting interesting. Why are these bears holding on while they're underwater? So keep your eye on these. I still don't think the bears should be showing up here. So. So you could see here, we had a little move down. Again, the wide short, remember that's the wide sample and the short sample. It's dipped down. The thing that has me watching this really is this, why are these guys holding on for so long? You have to start wondering what it is that they think they see. These fellas and these fellas and these fellas, they should all be getting out. We should see this accelerate up. We're not seeing that. And there's still quite a bit of time in the day. If you want to hold on to this and we just keep going, at some point you're not going to be able to keep doing this. So I'm having a hard time thinking the bears are going to come in here and have a really great impact. I think they see some, maybe it's just abstract, there's some abstract concept that may be coming up in the future that they think is worth the extra risk. But that's the future. Right now, it's, yeah, we're not, they're not in a good position. This is not a good position. So keep your eye on these numbers. This is a spot for the bears to get their foot in the door. It doesn't mean they will. It's just, I think there's a little ambiguity about whether the bears want into the market right now. If they see something and they're holding on to this, it absolutely could imply, yeah, we want to do this. We're trying to get in here. We're still holding on to our position. Then the decay retest becomes pretty valid. And this is tough. If they're not, they're just holding on to something that they see, which an institution that's big enough to consume liquidity doesn't just do random stuff, then this decay retest is not going to matter. I think this is a really interesting point to be at. This decay retest is going to let us know all about these bears. And this could be a tough spot. If the decay retests end up holding together, we get some new lows come in, which we have. So it's all complete. This whole thing you can see. So the decay retest, you get the retest, get the trapped orders, and then you get a couple of new lows to suggest the market lurches in the direction of this. Then you have it all complete. And then you could say we know that there's stops above there because that's part of it. A decay retest reduces risk, but exposes stops. So we know that there's a stop and it won't be too far above. And the market can use that stop loss to actually generate some liquidity for the bears. But running those stops could cause some real issues because this would be the last effort by these bears. It could become a real problem if that falls apart. Do you think the bears are going to jump in here? Do you think they have good cause to try and pick this up? Maybe the gap closed. We saw that looking at this smaller chart here. The gap for yesterday closed. Is that the reason? Is that what this is? We're just moving up to close the gap. It seemed like there was a lot more going on here than just a gap close. Decay retest right at a gap closure could be a spot for them to hop in. So this is going to be an important moment. We still haven't seen those bears liquidate. So bulls just got to keep the grind moving, keep the inversion in place, and they'll get wiped out. But this is gap closure, decay retest scenario. If the bears are trying to get in here, there may be a little bit of effort. Not saying it's going to work, but there may be a little bit of effort to be aware of. I think the objective with this is to liquidate these bears, and they may be in for one heck of a ride. So I'm waiting for the liquidation. I don't anticipate the bears to pick up this decay retest. So somebody mentioned, Mike mentioned a White House press conference at 2 p.m. Absolutely. Yeah. That could be something they think they're waiting for. The thing with press conferences, especially with like a loose cannon type president who does things, that's risky. It's hard to really predict exactly what his position is on everything or what he's going to say and do. But yeah, I think that could absolutely be something to be waiting for. And I think we could see that. I think it's pretty clear. We could see where their positions are, what happened, the mentality, all the things were going on, and the market grinds against them, and they continue to just hold as though there's something they think they see. These guys think they see something, and I don't know what that is. I can't tell you what that is. I can't even tell you when that is. Perhaps it's the press conference. Perhaps coming up pretty soon. So we're at 20 minutes. But I can tell you that they are underwater and they're paying out. They're hemorrhaging, and there's no reason for the bulls to stop. This decay retest is coming in. You need to know about it. But I think under the context with everything we have, so what are you gonna? It just seems like getting in there is gonna accelerate the upside. I don't think so. I don't think so. So, and I've told you that, that's my opinion. I don't think the Bears are going to be able to pull off this decay retest, and it's going to be successful for them. So I think we're going to move up. So the way that I'll watch these play out is just remember that a decay retest usually comes with a pivot and price. So if this is price of 0, you get this, and then the next thing will be to look for those stops get popped through. And so if we have a wide sample, a lot of the times there will be some stops just above. So we're moving up, and you look for that. And this will be my opinion is that 0 and an N+1. I know that's just way out. Anyway, so there's that. And then we'll get the wide short. So we get that wider decay retest, and then an intraday decay retest, kind of smaller, just right after there. And that'll be the one that I'll look at a little bit more. But I think under this context, it's just... "20 minutes. I think the Bulls should just say, giddy up. Let's go." And just say, sure, you guys can have your press conference, but we're gonna take your risk tolerance. Just slam it up. Just go to town. We could wipe out the inversion just over the next couple minutes. And sure. And then they can have their stinking press conference. Oh, it's not Trump? Nobody cares. Nobody cares. It's like, nobody, I only watch those because Trump was talking, and he's entertaining. He's like the main event. I want to see him fire like a government official or something. I don't know. So that could be it. I don't know. All I know is this decision's horrible, and I'm trying to read in between the lines and say, why are you holding? Your pain tolerance is not forever. Yeah. I think a lot of the reaction on Friday had to do with the bluff, the behavior of the players more than the information. I think everybody knew he was going to take China and throw him over his knee and try and spank him. Like, I think we all knew that was his mentality. So that wasn't shocking at all. It was what I think was a bluff. They were just bluffing. Bluffdale. Okay, just waiting, more waiting. This is just waiting. China up. It just makes me laugh because it's so wrong. If all you look at is the news and you're like, how are their stocks up 2%? They're getting... But then again, at the same time, that makes sense for China. This is just a waiting game. It's just a big fat Chernobyl. And we got through all those levels. I mean, we could take a look at a little bit wider, which we were taking a look at. We got through there. I think I'm going to steal this one and put it. That would be maybe the next. But the thing is that I think if you were a bear, you're already wrong. I think moving up there would just be stupid. If you got into a position and you're underwater what they get in 50, 48. I mean, they're underwater 10 points. That's stupid, as in stupidity. So that's, we're just, hopefully you see, this is a really good example of an inversion. I mean, this is how these work. I think it's been great. The churn and price, the pops and this and that and that. And hopefully you look at your basic, maybe if you use like a 1 minute, 5 minute chart, 3 minute chart, one of those, you should have been looking at that going, oh, there's lots of different things that catch my eye. And you can see the inversion looks, I mean, the tick hasn't come down or shot up, it's stayed down. We've expanded over the value area high, so getting some expansion. Closed a gap, sure. But I think in terms of inversion, this has worked out pretty well. So I think we're doing pretty great with regard to that. So you'll have to make your own choice about what you want to do from here. As far as I'm happy, I'm all done. I'm done. I am personally done trading today. There's nothing else that I'm doing. If it continues up from here, I'll be very glad because we were able to get this together. If it stops and the decay retest holds together better than I thought, so be it. I was able to put this together, see what was going to I'm done. I'm happy. From here moving forward, my mentality is going to be data collection. Just observing the events, tracking the mentality, using embodiment, trying to put myself in their shoes and assess motives and reactions and all sorts of stuff. And tracking how well this works and things like that. For me, though, this couldn't have gone better. I mean, it worked. We saw what was happening. It lined up. Things just worked. So again, let me echo, I'm done, but I do think that the trapped people from yesterday, there could be lots of upside. I just want to, that I'm all done. Whatever I was doing, which I didn't tell you because sometimes I just don't want to tell you what I'm doing. I'm sorry. It's my business. But I'm all finished up. The rest of the day is going to be a mixture of churning this up, and it could get more aggressive. But I'll tell you right now, I caught the absolute meat and potatoes of this trade. I have the core corn-fed beef patty. I got the core of it, and I did great. I didn't have a lot of pressure. Everything was good. It was fine. And that's all I want out of my life. I don't want to sit here through big negative swings and upsetting things. And like Friday was a roller coaster, from my opinion, but I knew it was going to be worth it. Today could continue, and that's okay. But for me, I caught the meat and potatoes. We figured out what it was doing. We figured it out. Go rewatch the video. We figured out what these magical market wizards were doing by watching them and saying, you guys are dumb, it's over. That's it. We figured it out. And for me, success is measured in money. I won't lie. My account balance isn't rising at a certain velocity. It's sort of sad, but more than anything, it's measured in my capacity to trust myself, which sounds simple, but it means that I also have to be able to understand, keep up, interpret, read, do it in real time. And these days, if I'm live streaming, I got to do it in front of you guys too. So I got extra people watching, and that's okay with me because I'm comfortable. I've done this a lot. So I can perform here. And that takes a long time. It takes a lot of work to feel like you can step out in front of people. And it might be something you might try. For me, telling me when you got out of your position is not all that useful. Telling me when you got into a trade is okay. Telling me what you actually think in real time before and during and just after an entry is significantly more interesting to me than hearing when you're going to buy and sell, because that is the hard part. having a real opinion, because most traders don't. They borrow their opinions and they read them online and they find them from other people. And it's not that that's bad, but it's all sheep. It's all liability, like you're offsetting liabilities. You don't want to have your, so having a real opinion in real time is a little scary. So I like that. I think it's very valuable for both the trader and the person you're talking to, or whoever you're talking to hear what you genuinely think in real time, because the very first thing you're going to be faced with is that you're full of crap. That's the first, you'll be like, oh wow, I thought I was actually, but when you actually start trying to say stuff to other human beings, you realize, first thing I realized was I was talking to Joe. He's probably not even on, but he told me I was the most confusing person ever. And I was like, crap, you're right. And that was hard. I had to learn to like speak to other people, because you watch charts for years and you don't have words for things because you don't tell people your thoughts. And maybe it's just me, but the first thing I realized was that my strategy was not communicable. I couldn't communicate. I couldn't pass it to other people, and that took a long time. And then you realize that you say too much stuff, and it really helps you hone down, because other people will go no or yes or no, and maybe you have a good strategy already, but if you can't communicate that strategy in real time in a way that the people you're communicating it to could learn to do it themselves, then I think that you effectively do not have a real trading strategy. And it takes a while. It's taken me a long time to be able to just walk through markets without being really confusing and all sorts. Like, clarity takes some time, because trading is such an abstract activity. You don't realize that till you try to tell everyone what you think, and then you go back and read what you said and you're like, that is confusing. But it's healthy. I think that's a healthy activity. That's just my experience. I'm sure that not everybody is confusing. Um, that was my main problem. So I think you should all do it. Share your thoughts in real time. Not for the people who share, because you'll find that 90% of people actually don't give a crap what you think unless you're saying whatever they think. Most people don't actually listen to you. They just want to feel like they can be, have somebody to listen to or something. It's not necessarily they actually care. So I think you should let go of the idea that you have magical secrets that you don't want to share with anyone, because most people don't care in the first place. And you should also grapple with the idea that the biggest benefactor of sharing your thoughts in real time is you. You'll get a lot of benefits out of that. I think it's just true. So I think everyone should do it. Not that you have to do what I'm doing, like live stream. That'd be cool. I'm totally down. You go ahead. But just sharing your thoughts in real time, something that is more meaningful than simple stuff. Like, you have to have genuine thoughts before you share them. And people will sort of listen, but really you're the one who's going to really get the most benefit out of it. And I think you should do that. Hopefully this was clear enough. I really do hope, because I try so hard to be clear and not vague and ambiguous, or even just sound vague, even if I don't mean to be. I know I do that sometimes. So if I do, you guys let me know. Yeah, we're just like, really, I can sit and ramble right now because there's just not much. There's not much to be done. I mean, if you're long, I think that was a good spot. Is it going to come all the way down? Honestly, I don't know. We had a decay retest there. I don't think it's a sensible. You could see it. There's a decay retest, and look at that. It's like it sat trying to figure out what to do with the stops or something like that. Yeah, Berger says teaching's a great way to grow. You learn really fast a lot of things about yourself. I think everyone should do it. I don't think everyone should follow me around. I think everyone should go out or at least contribute in a way that makes them feel like they're teaching and stuff. I need to go tell somebody to do something. I'll be right back.
You tell us I'm finishing up a little bit of still work.
Okay, how long do you think like
20 minutes maybe.
Oh, you guys heard all that. Oh, okay, well, that's fine. I had to go tell somebody to go get on a game. I cranked my volume instead of turning it down. Oh well. So, John, you asked, do I mentor people? I have not. I've thought about it, but I haven't. My thought has been, I don't really want to be responsible for people. That puts a lot of, time and effort to coach someone, and I've worked with a few people to try and get up to understanding the system that I've put together here for just understanding what's going on in the markets. And it can take some time and be difficult, and people have their own speed limit. So I haven't done that. I haven't specifically mentored anybody, and I feel like if I was specifically mentoring somebody, it would be like verbally communicated or some sort of contract where there's established as an actual position. Right now, I just work with people as in the room and stuff. But I haven't done that yet, but I've thought about it, but I haven't done it. I'm hoping this is useful. I do realize that mentoring would be more one-on-one, and that could be really useful. I find that a lot of people have questions they don't want to ask, or not that they don't want to, you just wouldn't unless it was one-on-one. But I'm not entirely against the idea, but it means being responsible for another human being. Dude, you don't need my mentoring no more. You don't need my mentoring. So looking at where we're at. So we just had this sort of move back, and I want to kind of what I'm seeing here just from experience and stuff. You can see that the decay, we've had there's our wide, right? And then still looking for that short. It's sort of just crawling up there. And you can see that if this is the trapped volume for that wide test, and there's some new lows came in, that really price, look at that, it's come right back to it. So if you sort of put yourself in their shoes and you say, well, if they were eager and they hopped in, they said, oh, it was a gap fill decay retest, and they popped in there, this pressure was probably horrible. Having it keep going, right? Like basically, what is that? Adding to a loser, and that's like the unspoken trading. That's not unspoken. That's trading law number one. Don't add to your losers. Add to your winners. It just, unless that's part of your strategy, but once your trade has been shown to be wrong, don't add to it. This is wrong. They're wrong. We made them wrong. They're adding to it. It's dumb. So then they're adding to it the decay retest, and then seeing that move up a little bit more. You see we get a little ledge here. That ledge where all the bars go. Makes me think, what the heck is right there? What was that all about? I'm like, I think somebody's stuck in a situation that's really ugly. And either they're coming in to fight for that position. I don't really know. I have no idea. But that's an ugly spot to be in. And then to have it sort of move up, come back here, right? You're sitting there going, so are we right or so are we wrong? All I know is that a decay retest comes with an exposed stop, and it's not going to be that far up there. And if it gets hit, oh, that's going to hurt. But, decay retest can hold together. Usually you kind of know that when this starts taking off in the direction. You have to decide for yourself if it's going to be a wide short. I like to watch for them because they tend to have, like you see that second spot there, and then you look at what happened, and it looks a little better to me. That's what I'll do. So I see this coming back on down here, and man, if you're adding to a loser and you're a bear, boy, howdy. The only thing I can think here right now, no, can't think. Why? Why are they holding? Why are they holding? Why are these people holding? Why? That's all. Like, that's just, it's something I don't see. Maybe they see something coming up. I don't know. But I think that is the thing that's going on right now, is trying to figure out what on earth they see something. And the inversion's still here. I think that the bears are really, really exposed to some high levels of risk, and that is dangerous for them. And we can see it. We can see what they're doing. We can see their what are you doing? Like, what are you guys doing? Hopefully it's this event that you had coming up at 2 o'clock is going to save you, but some sort of bombshell going to come out that is going to just change everyone's perspective? I'm not sure. I'm not sure what it is that they think that this party thinks they see. So I'm having that's sort of on my mind right now. Just like what's the deal? Like, what's the deal? Well, if that's the case, Jim he says, I've noticed when we are up against a breakout resistance and the bulls don't want to give a pullback, which looks a lot like what we've been doing here, bears would need to keep making mistakes like adding to losers to create fresh liquidity in order for bulls to have a breakout later. And that's, yeah, I agree. So that this decay, so sort of he's saying this decay retest or anything long is going to create some liquidations up here, which I totally agree with. The question I'm wondering is, what do they see? We don't usually see either side really hold on all that long, and they're holding on through this. And I have to wonder, like, what's the motivator? And so I'm not sure, but I think that's the deal, that the bears are saying, hey, we think we know something. And the bulls are saying, hey, good for you. That's the exchange from where I'm sitting. So tough spot. This is a tough spot in intraday. I think overall, I think we're seeing that the bears think they know something. That's really hard to use over the next 10 minutes or something. Like, you can't. That's not useful, but it does give us an insight into their mentality. And while we know that, if I were a big bullish institution, I'd say, well, as long as they want to be prophetic about markets, we should keep pushing, see how far this could go. But at the same time, it's inverted. So it's like, it's supposed to be a time when the bulls don't have to push. They sit back, let the bears do their thing, and then it just continues up till it blows out the bears. And that's sort of, I guess, sort of a channel mentality where you're sort of looking to blow out bears as something aggressive, terrible, horrible. Yeah. That decay retest there. Adding to a loser. Why would you do that? So I'm going to say, thinking about this, that probably the position that I would watch here, because that's where we had the most important events, was this one, not this one. I think this is the most important. We had liquidity there, we had this here. So I'm going to mark this out. So if we see things coming back down or something in the future, I think this is the level that's going to matter more. Then I'll put it right at the zeros here, because that's the most important one, right? That was where everything. Yeah, happy, exactly. That's exactly what it is. They're trying to cheat again. That's exactly how I'm interpreting this. And so it's like, well, what do you see? And it's insider information that's not distributed to the public, and it's allowing them to tolerate a lot of risk. And you have to wonder, what is it? What is it? Anyway, the Bulls, I think that this was probably the most distinguishing moment for me, was right about here. So I'm going to mark that out, put it at 75. And then that would be the opening position, which I actually don't think is as likely to cause reactions, because it's not as analytically like filled with information. It's just a bullish position off the open. And yeah, it's great and all, but like if the market's going to freak out or something, I think the ones where there's a lot more analysis going into the positions are going to be more important to watch. So that's where I think they are. And if you're going to liquidate those guys, actually, think about there. So we came down here and they just said. So we got it marked. We know where they are. We have opinions. I think that the Bears trying to cheat. I think the Bulls got them upside down. Our inversion is in place. The gap closed. Decay retest is like putting these Bears in a interesting situation, like adding to a loser. This might get interesting. Look at that. Look at that. You see that? It's almost like a little bit of impact right there. You see that? And you're going, wait, so is this coming in and we're seeing some impact by the Bears? Like they're like, yes. That's not good. That's not the way you play these things. You don't come in and shove the market down out of a decay retest gap fill when you're in. This isn't going to go well for the Bears. We could see their footprint. We could see a little bit of it's that one version. It's not like a super strong. It's just the fact that it's slowing down, like, and it doesn't look like it's just natural. You know, it was doing. It's like that's like a response to this decay retest. And I'm sitting here going, whoa, you guys are impacting the broad market, even any off of a decay retest. Oops. Oops. I think they should have dumped their position a long time ago and filled again. They're holding. So if they're holding on, if they had liquidated and I saw this, I saw that. Oh, man, this is. So you can see velocity has sort of picked up that thing we were talking about. It's looking like into the close at best for velocity to get us some liquidity. Yeah, I am. This here out of a decay retest when you're underwater from here just looks like a bad play. I don't. Maybe something's come out in this. In the Mike told us about the press conference. Maybe, but this looks like bad management. This looks like, oops. That's what that looks like. And if it's oops, then why not? Why wouldn't we? Why wouldn't we see this just go for it? Go for it. Go for the high. Go for that high. Go for it. Go for the Thursday high. I think selling this was the right idea. That's my opinion. I don't think that was right. I think the best move would be to see the bulls push, push, push till we get tick to shove up and clear out our inversion. Yeah. I don't think that was the right move by the Bears. Okay, so last couple times we've seen them dollar cost average a loser. The market like to tinker around. So I'm going to use this one, and I'm going to use right here. So that's it's about here and about here. And you sort of get in the middle. You know, if you're dollar cost averaging, we'll just say the middle. It could be all over the place, but so right about there, we're going to see this little middle area where the average position would be sitting, and anything below that's going to be paying out to the Bears, which is extra work for the market to do. And I think the most sensible thing, if this is what's going on, is to do what I call playing around in their stop. And if you've ever been in a position that's upside down, like if you'd shorted here and the market goes up and it comes back down, it does like this thing, and it feels like they're just screwing around without, like, they're going to wipe you out, but then they don't. They just screw around. So maybe down, was that 50, or sorry, 30, 52, 50, maybe 30, 53. We'll say 50, we'll say 53. Yes, we'll go with 53. We'll say it's about 53. So we could tinker around here like this without letting that cash average position out. Now, I don't know the scope of that, so I don't know what the dollar cost average level's really going to be at. So I'm just going right in the middle as like, well, if you're going to dollar cost average, here's where your position is, and I'm going to make the assumption that moving through here is going to pay the Bears, and that's going to put extra load on the market. I think the market, will consider that. So 53, I'm going to go with 30.53 for their cash average position and say this market has these Bears upside down. I think the best play is just to shove it up. Just quit messing around. No, I don't see the Bulls failing, John. So for the Bulls to fail, which is a legitimate question here, is you're probably looking at this. And we need a sample, which would be decay dipping or velocity dipping under zero. Or, tension could be pushing through or something like that. But we're not seeing liquidity by either of those. So this is just trapped orders. It could be, it changed color. I don't know how to change the color. It just does that sometimes. I don't know. That's sell orders right there, but it's not liquidity. It's only liquidity if you can structure it correctly with decay or velocity. So no bulls failing here. What we're seeing is the Bears trying to grapple with the idea that they're stuck in a pickle, and if they don't make this magical news that they apparently know is coming do anything, they're screwed. And when I say that, I mean this high here, Thursday's high. So there it is, 30.66-ish. I'll round that off so it's a little easier to see. 30.66. So we'll be taking those highs out if these Bears news doesn't work, because they've exposed themselves to too much risk. So I think that's what the market's dealing with right now. It's trying to figure out. These Bears got into a decay retest. Why do I say got into? Is because we can see their impact here. It started to sort of lean, and I'm like, whoa, even any leaning, a decay retest, really? So we could see that they were doing something. And usually these don't have much of an impact on tension. Like that's one of the features, they can bring things down and tension can keep doing whatever it's doing. That's okay. So we're seeing this decay retest. Look, it's holding together and the position's moving. But if they're holding here too, they're going to be upside down about 3053-ish. Right in the middle of those two. And the market's got to figure out what it wants to do. Okay, here we go. We're getting down to that spot, 3053. That's where I'm thinking is right in the middle of those two positions. And let's see. This is where your risk is going up, and so our complexity is getting to high. We're getting to a high, so we have complexity. And you say, well, how'd you come up with a high rank? Well, first of all, you're going to need to know about all the stuff that's gone on in the market, all this stuff. So you need to know what has happened. Secondly, I think the only reason, like what is motivating the upside here is previous days, yesterday. This whole thing was a big, ugly, nasty trap for the Bears. And I think that understanding that is what's going to give you the context to say, there's a lot of upside here. That's the context that I'm getting. And these Bears are dollar cost average a loser where there's a ton of trapped Bears from yesterday. Did the Bears from yesterday liquidate? Oh, I'm sure a lot of them did. But, I mean, big traps, big wraps. I don't know. I tried to come up with some catchy. That's a big whole day worth of trap. So I have a hard time thinking the Bears are going to get anything positive out of this. I don't care what they see. Until that news event happens, until it executes, until it runs whatever, they are underwater in a bad trade, and they're cash averaging a loser. And that's it. Until their magic happens, they're stuck. That's all I think. Yeah, that's all I think. Awesome. Okay. All right, John, I think there's a lot of lag here, or at least some. So I see that you said gotcha. Hopefully that made sense. So this is just the waiting game. I think my experience with risk is really, this is that trust portion that you need to have some previous assessment that allows you to hold if you're going to hold. And at this point in the ball game, I'm not sure that picking up data points and trying to make it sense out of them is really the rational thing to do. I think the rational thing to do is to trust the team you're playing with. I mean, until these Bears really run their news event, they're just being stupid. I mean, they're early. That's what it is. They're early. Insider information or not, they're early to the game, and this is what happens when you're early. So we're just waiting for either that to play out, some news event to shock the market, or until they break. And I'm on the break side. I'm on the move up side. I think that we've got enough people trapped in here from yesterday, today, that holding for some news events, just a bad idea. But I don't know what the event is, and I don't know the time frame on it. It could be tomorrow morning. It could be 20 minutes. It could be overnight. Could just be making bad choices. But typically institutional sized traders, ones that consume liquidity in this way, are not simpletons. So they see something. I don't know what it is, and I don't know the size of it, but it's something. We'll know eventually. The point is that knowing that mentality gives you an idea how how things should act and what they're doing and why certain things are occurring and stuff like that. Look at that tension. I mean, this is some more impact here. Makes me think. You know, they're there and there. This one they failed to impact here. They did. So at least this decay retest, we're seeing some move down. It's like they're like, okay, well, let's see what we can do. You should have liquidated your other position. Seeing what you can do is just going to work against you. I don't buy it. I think it's just fancy. I think it's just fancy footwork. Just fancy footwork to look real pretty for the gap closure decay. I think it's just fancy. That's it. And the bears can definitely come in here, but I don't see a case where it's like this is such a good move for them. The best thing the bulls could possibly get right now is waiting until bears. Best thing the bears just waiting until bulls get sampled. That's the best. They need to wait. Just wait. A decay retest could bring it down, but your risk exposure, like they doubled down is what they did. Your risk exposure goes way up because you double down. So if you have a dominant party that's in a positive position, wildly positive, and they're looking at you and you're upside down, doubling down, you better have a doozy, like a real face ripper. Really hard time seeing the dominant party say, sure, we'll let you double down. We'll even let you out. Sure. So they better have something real special up their sleeves. They're going to get this to bring them all that money back. All right, just a second. I got to tell somebody something again. All right, I'm back. Here's where the fireworks start. We are at 30.52.75, getting to the point where if there's a double down here, dollar cost average, this is the break. We're getting to that. We're like, it's gonna be break even. Moving down through here is it's gonna be a kick. It's gonna be market's not gonna like that. Market's not gonna like that. It's gonna have to pay those people, and it doesn't. It's want to. You're gonna let those punks get out. Why would you do that? It was a good push. There was a decay retest there. We didn't get our short, like we got the wide. You could see we got the wide, but we didn't get the short. It just didn't work out. All right, here at this was that there. It pushed up again. We didn't get the short. So you can see it's already playing out. It's moving forward. So we're just gonna say, hey, there's stops up here. We know their stops are just right above the high. They're not gonna be like way up there. So we know they're there. We know the break-even position is right here. I don't know. This just makes a lot more sense to me than anything else. And why would you let overconfidence come in and make money? That's silly. Overconfidence is one of the products you sell. Okay, so we're sitting right on the backside of that dollar cost average position that I think is going on here. We got those stops up top. The bulls, there's not much really. I mean, that's a ways. I mean, like this distance, that distance could cause like a relative decent move down to try and sample the bulls to see what they're going to do, and that could be trouble. And the bears are doing some pushing. You see tension, right? You see tension. So it's like, this is tense. If these bears can push this down, they might be able to pull some money out of the market and lean this down to try and sample those bulls again, which interesting. And that could bring this down here. So that's this to me, probably not this. I think it's this one. Getting that down there and getting a sample. I think that's what the bears are looking at. If we could get that liquidity for the bulls, that'll give us a chance. You could see their impact right there. And at this rate, maybe 40, right? Maybe 40 into the close. Got that dollar scooting down. That tells me, people are they're taking their value out of the dollar, giving the dollar back, and moving into something else, and that's bringing that dollar down. So it's cash moving in. Doesn't say what, but it's been at that for a while. Nothing too exciting anywhere else. Tough call. What do you guys think? This is a difficult. This is just risk. If you think the Bears have something, you think they have something. You think they picked up decay retest and they doubled down because they were justified in doubling down. I mean, we know they're holding for something. They're trying to insider trade something. I don't know what it is. I don't know the time frame. And then we see a decay retest show up here. You think that this is going to work for them, or do you think that this move down is not going to work? They're pushing too hard. They haven't set it up properly, and it's going to fold them over and move higher. I'm interested to think what you guys know, or hear what you guys think. Think what you guys know. Hear what you guys think. Fold them over. That's what I'm thinking too. John's got the right idea. I think it. Why not? So I'm looking at this right here, 30. So to get 30 down to 0, we're gonna need, 30 times 20 about. That's gonna be 500. So 500 off of this to get that down to 0. It's gonna be 1100. So still not bad. So totally doesn't disrupt the entire thing, but 500 down just to pick up the bulls. We've got hour and a half, so that's going to put them in a tough situation. I mean, that's going to be a pickle because that means this will move down and likely give that dollar cost average a good spot. We could see, well, I kind of like thinking the idea that they're going to want to buy out. You know, they're going to want to get out of of that position. We see some demand to the upside, a pop. You know, look, you can see that energy just whoop. I see. So they're participating here. That decay retest, dollar cost average. What's going on? All right, so this is I think where the market's looking at. You see this tension? So I think getting that down, we're at 24 was that was a half hour. So 24 times 20 is like 400, 480 or so. 24, 2, yeah. So it's about like about like that. So we'll say 500. Still, I mean, it's still like 1100, 11, 12. So 11, 1200 on there is still good. That's not bad at all. So this could happen without bringing a whole lot of stocks with it. We could get this down. See how it's sort of, we're getting like a little bit better there. It's moving down 24. Okay, so, and look at tension. We're seeing some action here in tension. Look at that. Like a notch. Like this decay retest just got some push. Too much push. It's just, I disagree. I disagree with letting the bears out. I disagree. I think it's the wrong choice. I think the bears made the wrong choice, and I don't think the bulls should do it. I don't think we should let velocity work its way to zero unless price stays sideways like this. I don't think you should move down. I disagree. It doesn't hit me right. I think that you should keep them. People who double down don't deserve to win. You might win once in a while doubling down, but most of the time doubling down is just playing into making your losses huge. I disagree. No matter what I think, we still have a little ways to go before we get the zero. So this is I think this is the big, that's the thing. And you could see it, that little, look at that. Look, it like, what the heck? It's like, what was that? What was that? You just push really hard for, seems like the highest risk thing you could do, because they're pushed out of a decay retest. Like typically you have like liquidity, you consume some known liquidity, so you take it in. Decay retest is like, what's a risk? It reduces your risk. It's like, okay, a little bit better risk. That's good. That's good. That's good. Exposes your stop. But in a situation where you're just screwed, I don't think the bears, it's like they want in, but this isn't the same. Like, it's like insider trading. It's just like, you want in, good. When do you want it? And it's like, I don't know. I disagree. I don't think this should go down. I think this should go up because of the conditions. Well, we're getting down here. We'll get to the 20. And that's what this line is here. There's 20 and negative 20. And 0. So, you know, a lot of times there's algo. I can spell. Algo, or algorithmic responses at 20. Why? I'll tell you why. Because people code the logic when 20 do stuff. That's I mean, there's some other maybe reasons for it, but as far as I can tell, people just have coded in that level to do stuff. It's just like this. agreed upon. Usually I'll see it and I'll think, I don't think that was a good use of your algorithm, but well, of course, if you were with bears, you'd love to see this going down some more. But like, what's your goal? What do you want to accomplish? The bears, I don't think pushing this down and trying to liquidate, like pushing this down, trying to liquidate them is really sensible anymore. That was things already took off. At this point, their next goal really is pretty clear. The bears need bulls to get sampled and then do nothing. And that would bring in an elastic market. And an elastic market is where the controlling party steps aside and lets the counterparty drive tension back to zero. They would need to see this happen, and then tension could start to move back down, and then the bears could hop in and try to ride this down to zero and be like, yay. It's like, if you want to see it go down and sell more, like, but what are you trying to do? I just think it's wrong. I think it's just stupid. It's just all stupid. I don't think this should go down. I think it should just go up and destroy the bears. But then maybe I'm just being, I don't know. I just think it makes sense. I don't think the downside makes sense right here. I don't think it makes sense to let the bears out of a loser. I don't think it makes sense to let them get the break even. I don't think it makes sense for bulls to just step back and let them not. I think the bulls should, and maybe they're just tinkering with them. I don't know, but I think the bulls should just press this out the high to make you feel better. Maybe. If they want to, they could push it down, feel better. Dumb and numb. That's a combination for traders. I just don't think there's a reason for this. There's back 55. We got to get this back up. We know where the stops are. I mean, it's like you could practically see them. You zoom in on this. See that ledger? It's like I could basically see the orders. I'm sure something dramatic happened there on the tape. I'm sure there was, but as far as I could tell, that's level just the stops from the decay retest. So disagree. I guess we keep our whatever that was. I don't know what the heck. It was like a little dip, and you see tension just went right and then right back. Is that it? Is that it? We still have our inversion is still in place, so we've still got that could go. We blow that out. That'd be a good place to say, all right, there it is. We caused all the trouble. And if this moved up right here, just like this, and then the tick, pushed up and took out the inversion level, I'd say it's done. Day's done. It's over. I probably just stop streaming right there. Go away. But this is like emotionally exhausting for me. Like right here, it's not analytically difficult. I understand what's happening, but it's always annoying to see people make stupid choices, especially at the scale of these institutions. And say, I disagree with what you're doing. I don't think you should do that. I don't. I think it's wrong. It's a wrong choice. That's my mama's 401k, right? That's what you're thinking. That's what I'm thinking. Quit making dumb choices with 401ks. No, actually, the market usually doesn't surprise me. I think markets surprise people who look for statistics and news events to trade, because understanding markets is hard. It doesn't usually surprise me. I usually get what I want once everything lines up. And of course, there are times when it does surprise me. Of course, markets have this way of giving you a kick in the face every once in a while, and you go, ow. But from this analysis structure, markets don't usually surprise me. It moving back down to try and let these bears out, I think, was dumb. I tried to work out both sides to see maybe potentials. I thought it was stupid because I think it was stupid because the Bears don't have great opportunity. There's just not a good reason for it. And unless they have that ace that I think they have, whatever they think they see, and we can see that because they haven't let go. And maybe that's what's coming up. They thought they had something and it flopped, which is just like perfect. Good job, guys. You're going to love what's next. And then we see this accelerate up. Could totally be just exactly the situation. They thought they had something, it didn't work out, and it flopped, and it's going to crush them in the most fireworks of fantasticness. It will just be so much fun because when you get big players making wrong choices, you have to start wondering. And a lot of people try and shadow along, and the more and more those big players' choices work out, even though they're wrong, the more people pile in, and it makes for the most spectacular of fireworks. And this looks like one of those. I'll keep this moved because it's like right. This looks just like one of those. So I still think a move up, liquidate these guys. We need to see a nice whoop. Would be great into the close here. Back to negative 50. That'd be great. Sure. At 38, maybe we don't get to 50, probably 45. Negative 45. We get to 45. We liquidated those bears. We took advantage of whoever piled in with them. We get to push a new high. And likely we see something like 66, 30.66. We could get to 30.66 with that. Maybe that's a goal. Milk it. I don't know. I don't know that I would say that was the Bulls who were trying to like pull it down. It looked like the Bears genuinely pick up a decay retest, pushed it down, hit their cash average. The market didn't like it. I don't like it. And at some point, the Bulls have to be like, go, or, Bears are famous for hanging themselves. They love to put nooses on and then jump off of stuff. And that's what this looks like to me. Like they're just like, yay, no, this is for protection. So that's what that looks like. The part that's emotionally exhausting is it's complex, and understanding people is fine until they're stupid. And I think understanding stupid people can be tiring because, especially in this world, because they come across as intelligent, and then you're like, how is this intelligent? And you waste a lot of energy realizing that it's not. So this whole move, this last move down is just exhausting to me. I still think it's silly. I still think up. I don't think down. Just the sheer amount of work that the Bears would have to do, and all the things the market has done to set up these Bears to pay for a move. Why would the Bulls even let them do it? It's a lot of work. It's a lot of work. It's expensive. It's not cheap. I don't think it's free. It's exhausting. Why would the Bulls let them do that? I wouldn't. Look at that. It's like this little impact on tension there. Just this little. It's this little spot there. Like, what was that? Why would you do that? Why would you do that? Hour 15 minutes. All right. Going into the last hour of the day. There's a few options to consider. We could take a look at all the different things that could happen. First could be, so we'll look at the downside. Moving this down into the close. Again, I think that's problematic because it lets out the loser, which maybe that's fine. Maybe the bulls are done. They're good. Maybe I have a hard time with that. But moving that down would be the bears. So into the close, we'll say this is the close. The bears trying to get ahead of an elastic market tomorrow. That's their whole goal would be to say, well, let's try and push this down, see what we can. But it's like if you push it down, there's a really good chance it'll probably pop up, and then the bulls will get sampled, and you won't be able to get an elastic market, and you're going to be taking this whole whatever it could be. Just that's stupid. Stupid. So moving sideways into the close, potential. And I'll tell you why, because if we just close flat, then anyone who's long, who's not like a bigger institution, who doesn't have a really great grasp on the market, will say, well, it's into the close, did great cover, and they'll dump. And then after the market opens, push it up and liquidate. And then you'd say to yourself, oh my gosh, this section of the market was more profitable than this section. We see that occasionally. And that's tough because me included, I really just like to be done. The extra money doesn't usually improve my mood or really make much of a difference a lot of the times over the long run. If you could just, we caught the meat and potatoes, right? Made sense. That's the part you're after. This whole complex move into the close, you're sitting here going, oh my gosh, like, why are you guys doing this? And it can get really heavy on you. So a sideways move could be good. But hour and 15 minutes is a little while. So that would mean this is going to churn up and the bears will just continually lose footing on tension the whole time into the close. I'm not sure they're going to like that. It's like, so they're in a position holding and doing nothing just to get worse and worse off. That's stupid. But it could shave off some retailers. So if you're bullish, a sideways close look good to the bulls, terrible to the bears. So closing sideways is going to look bullish to me because that's who would benefit, because they'd shave off all those longs and it would make them move up a lot quicker. Bears would hate that. I think they would just hate that. But that's good, because if the bears hate it, they're going to buy to cover and the bulls are buying. So it's everybody on the same side straight up. A move up into the close, call up ramp capital. Ramp cap. Sure. We got this little push here. So there's money there. We got multiple days of traps. We got these guys in, these guys in. We could knock out these stops to help us go. Liquidate that position could absolutely go. We have our inversion that we could have push up, and that could help with some of the mechanisms that rise. So I don't see any reason why this couldn't just push up, hit 30.66 into the close. But if the market closes flat, that could benefit the bulls. I think that if this started to close flat like that, I think the bears would start to unwind positions, and that would start pushing things. I think they would go, oh, this is not looking good. So something like this, like a kind of thing, where it's not like straight up, and it's not flat, and it's not like this. It's, exponential curve, I guess. So I think that makes sense. And whoop, and then right in here, it gets directional, and it's clear what's going to happen. So I think that's the most reasonable thing to do. The mixture of sort of trying to close sideways is going to get, these guys are, they're going to want to start unwinding. That's going to start bringing it up, which is going to bring in bulls trying to, and it's just going to whoop. So I think that is the most reasonable thing for this market to do into the close. I think 30.66 would be a great place to close out prices. It pushes us up through those highs. Oh, you're going to be putting a lot of sweat on anybody who got trapped in Friday. And that, again, those people are, at this point, you start to see a slow climb pushing higher, getting to 30.66, the Thursday high, and that's what I'll be doing. So they'll want to buy out too. So there's just a lot of participants who we're going to need to fill long orders, fill longs. Whether you're unwinding the short you're in upside down, whether you're unwinding from Friday, whether you're trying to sustain this bullish inversion with the bulls who have this up, try and pump tension. If you're trying to hit, everybody's on the same side. I don't see anybody on the other side. There's nobody on this side. This push down was unreasonable. Maybe it's dragged out some of the time. I don't know. At this point, I see that I wouldn't say sideways to up. I'd say up to slow up spike out the top. I think the real tell here, I know we have this, is going to be tension, or the tick. So this. See that shoot up, see it get to 1250, more even, up here to this one, 13. If you get to 14, that would be, I think this is going to be the tell. This is going to be the thing to watch, is the tick. So I'll bring this over here, turn this off, and we keep that right here. So you can see the tick. And this yellow line will replot right there, so it's easy to see. I'll scoot this down so you see those numbers there. Okay, so I think that's where we're at. This is what I see going on. I think that move down was a dumb. Bears are stuck underwater. It's not coming back. Don't short it. It's not going to work. Oh, I gotta go to the bathroom. Just a minute. Okay. Nothing. This is just a waiting game. I just think that's really interesting. This interests me to see the decay retest, lean back down to the cash or the cash average position, and see up. It's like a push right there. Why would you do that? Why would you? Maybe you're wanting to deleverage. You try and sell into your cash average to try and bring your average up just a little so you can cover. Maybe. But most likely it was just a bad decision. I don't would you do that? Why would you do? Is that the thing you saw? Maybe that's the thing they saw. Are coming up on the last hour. We got 4 minutes to the last hour. Oh, yeah, Jim's posting over here that some big players are getting bigger positions. They're going into equities, not out of them. And then telling everyone it's bearish. Bad news bears. Somebody paid the bad news bears. Something. I don't know if they really pay the bad. I think you just wait. And when some bad news happens, you just give it money. You know, bad news seems to be louder when you give it money. You just throw money at it. One more hour. Hey, Matt, you're welcome. Thanks. I know they're long. I don't know a better way to get you the content. What's going through my head than this? I think trying to write up documents and stuff would just be confusing. You got to watch it. You got to see what I'm doing. Um, I'm glad you were here. I'm glad everybody shows up. It doesn't tell me how many people are watching. I mean, it says concurrent viewers, but it still says one, and I don't think that's true. So I just think it's not updating. But hopefully it's useful. Hopefully you can get your head around how this works, and then you don't need me. That's the whole goal. Or 56, 57. We just got to get 30, 60. I think things would be clear. We get up through that little ledge in prices there. You know, that ledge we had earlier. I think we popped through right there. We get through that ledge. I think it's going to be like, crap. We thought this was a winning. I thought a flat top on some price bars meant I win. And I think that would just be the straw that breaks the camel's back. You know, we could get things moving into the close. But yeah, dragging it out sideways doesn't. I mean, bulls don't do anything. It looks like the bulls are gaining advantage anyway. So, not like a big rush. And the bears just did what they could, and that didn't really work. Like there's not like a rush to get things up, but I'm anticipating them going, and I'd really just like to see an explosive move, and then I'd be like, all right, that's it. So during our last hour, a lot of focus of these players is not actually in the last hour. I think probably a lot of them are no longer really considering what's going to happen. I think it's sort of done. It's already set. I think what they're doing is looking into the next day. And I think that for the bulls to keep this going, keep this going up, they're going to either need to burn through some of this tension. We get up to 40% or 45%. This, if you think about that, 45 here, and you keep doing that, at the end of the day, you're at 70, and that's intense, and that's going to be a lot of downside pressure. So right now, I think the thoughts of the bulls are going to be like, well, how are we going to keep doing this tomorrow? And if this pushed and it closes right here, like we got, and if we gap down, it just close to here. It doesn't have to. Yeah, just like right there, and then we could keep going, like that kind of thing. That'd totally work. The point is that we're getting up to probably 40% into the close, and it's where are we going to go tomorrow? And how do you get How do you pump tension? How do you get tension to continue? You liquidate the other side. So if they want to pump this up higher, they're going to have to come up with some situation where uh, the bears get in and provide that funding. And so blowing out all the bears into the close today, which is what I think is going to happen, just like this, you're going to have to say to yourself, well, okay, so you just wiped out probably a good chunk of these guys, and these guys. Okay, so you're going to wipe out them into the close, right? Who's going to pay for more? And you say, that's actually a really good question. If this gets really aggressive into the close, we could shave a bunch of people off. So a move down might make a little sense just because, and we'll see that. We'll see it in tension because tension will accelerate when you force big hands out of the market. So I think that moving up to the close makes sense. I think this thing is built to do that. I think it was constructed with the intent of a blow off top. But looking into tomorrow, it's like, well, what are we going to do? And it may be that elasticity is the way to go. So just shove this up just as high as you can, and the bears will come in and try and maybe wait, and they try and bring it down as far as they can, and then the bulls, defend and go like that, and then we head back up. And that may actually make a lot of sense if this moves up and wipes out a lot of people. Elasticity. And elasticity tomorrow will look like, so it's some sort of bullish sample, and then the bulls just do nothing. There's no impact, so maybe tension opens here. No impact, and then maybe it goes down, and the bears get sampled, and then tension ticks. And you go, oh my gosh, they stepped out of the way, and they hit, and then you say, okay, their objective is 0. So they'll try and get that to happen. And the bulls don't have a problem with that. It's like, well, get us the lowest prices you can. So we could see prices do something like that and then head up. So that's what I think tomorrow's looking like. I think a blow off top is going to lead to an elastic market in the morning. I think it's perfectly sensible. And then after elastic market, we'll get the bulls into a position to run another leg or something like that if they show up for it. So I don't have a problem with this shooting up and then coming back down. It could even gap down tomorrow or something like that. The point is, I think today is already set. Like, it's already figured. I don't think anybody's moving around now. It's done. It's tomorrow. Otherwise, we could see the bulls burn off the market. And an elastic market is a burn off because you're getting tension down, but it's like an approved burn off where the counterparty gets approved to take advantage of it. Otherwise, we could see something like the market opens here and does stuff like this, and then tension goes like that. And so it sort of closes flat, doesn't really go anywhere. And then we cool it, and then we could do another run. That's another option. It's not as fun, but we could have a burn off day where not a whole lot happens. Deal with tension. Pumping the market higher is totally doable. But at the end of the day, if we get something that looks like that, that is going to be negative 70% easy. And that is a lot. That counterforce is going to weigh a ton on the market. So I think it's less likely that we just shoot straight up throughout the day. Not impossible, but in any one of these cases, the market's going to have to deal with bulls. There's no situation where tomorrow opens and it's just bears, 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 bears. Tomorrow, the market will open and the market has to first deal with bulls. So as far as I'm concerned, this market is bullish into tomorrow. Even if it gaps down sideways, it's not about the price. It's about the context. And in this context, there's no situation where bears open the market with some implied amount of control. They lost that this afternoon by sitting and doing nothing and then cash averaging a loser. That was dumb. They handed it over silver platter. It's done. We're shooting up. I think this is going to hit 30-60. Wipe them out. This is what bad choices do to you. So I bring that up because now you could sort of get an idea about what I think is probably going to be going on tomorrow. Like, we're going to be having this struggle between the bulls and the bears. It seems like the bears are willing to make dumb choices. Are they going to come in tomorrow as enthusiastic as they were today? Are they going to come in and say, hey, we want to cash average a loser again? Honestly, I hope not, because if you beat up the counterparty too much to the point where they're just, they stop playing. If they stop playing, really what happens is the ability of the market to be volatile and go places drops. And so it just, not much. Those really slow days, yeah, sure, it might rise, but it's just lame. Slow, few entries, if any, and then boring. So blow them out today, get us elasticity tomorrow, let the Bears win a little bit so they don't cry babies, and then we buy in before, and then the Bulls buy in as tension gets to 0 and they redefend it. We get see what things we can set up along the way. It's going to be sort of by the ear in that aspect. I don't know that I could sit here and tell you what types of setups and things. I can tell you that elasticity, I think, is the most likely thing to happen into tomorrow. So with that in mind, tomorrow we could see prices come back down to 30.35 or something else, or 30.40. Totally fine. I would just be ashamed of the Bulls if they let the trapped traders from Friday. That would, even if I wasn't in it or trade, it just make me mad, because that makes a big statement about the market. We have trapped bears in. The news propaganda nonsense worked, blah, blah, blah. Things aren't so bad. And then to see, it would just be really frustrating. I don't know about mad, it's just really frustrating. It's all that money and you're going to pay it to the Bears. Why would you do that? Why would you do that? So I don't anticipate it. I'm just saying I would be really annoyed if it did happen. In terms of overall, let me pull up some charts. Maybe you guys, I haven't really been using a whole lot of them here. Mostly just bandwidth, like it's a lot of bandwidth. So I'm going to bring up the live charts, which if you're not using, you just sort of go over to this page and you just sort of click on that button. That's it. That's all you do. Anyway, so looking at this, I mean, look at this. Stat ADI is very near 0. Like, it's not aggressive. So while the prices might be moving around, like, we're not seeing aggressive stuff. So the things that I like to look for on the stat ADI is there's a lot of things, characteristics that you have to get familiar with. But I mean, the stat ADI up at like 3,800 or down at, sorry, I'm so dumb. It's close. 3,300 or down at negative 3,300. Stuff like that tells you things about the extremes. It lets you know things are extreme. And you can see that a lot of this, even though it's not that extreme in terms of the statistical location of the advanced decline with respect to itself. And then looking at, we got new best fit vectors. So this is, these are the vectors of the market, and they take into account tons of different things. And they're looking at the best fit line, but it's a vector. You can see that, we were green pretty much all of last month, and we had a little bit of red, which the market didn't like so far, and it's back to green. We've just been, so this is looking to continue, though. You could see the trend, the slope of this trend here. It's a little bit less, so things seem to be cooling off and tightening up, but we're already back to green. So keep an eye on this. This will develop over a couple of days, my experience, and then it'll sort of settle on a direction, and then so even though this is looking intense and we're like, oh my gosh, this could blow out this side or that side, and we're gonna shoot through the moon, this does not look that aggressive. From the statistical location of the market internals, nothing really all that aggressive has happened in the last week or so. It's been fun. Like, the markets have been really dramatic and had a lot of cool stuff happen, but it's just sort of hanging out. So we're going to have to see something dramatic to get things moving again. I think the market's spoiled because we had the whole pandemic crash of 1 billion points. And it was like, whoa. And then now everything's just boring. So that's the stuff that I'm seeing. And it's useful to kind of keep those in as a longer term. So like, okay, our best fit vectors seem like they're moving up. So it's not quite as dramatic as maybe it seems. Overall, It's not all that dramatic. And for me, dramatic is like you start expecting like these wipeout bars that are just insane, and this just isn't that. Until something happens, and the thing that happens that gets the stat ADI moving again is gonna be dramatic. It'll be shocking, and I doubt I see it coming, or maybe some people do, or maybe I don't know, but it'll be something shocking and jarring, and the market will go crazy about it, and that'll get things moving again. But it seems to me that if this pendulum has conservation of energy and it's oscillating, that it's cooling off and we need some juice again. And apparently the riots over the weekend just weren't enough. It didn't, surprisingly. So 41s, we actually might get to like 45. We get a 45% right there. Yeah. So we're getting that sideways-ish. It's got a spike down. It's exciting. I still don't think down makes sense. But looking into tomorrow with the elastic expectation, where it's like that's the most probabilistic thing. Elasticity burns some of this tension, run another leg. Yeah, sensible. So this is just going to be a waiting game. I mean, if you happen to get in here and you're hanging out right here to the close, good for you. Hanging on to the narrative, and that takes time. If you're just following me, I don't know that that's a good thing, because that would say that you're offsetting your liabilities onto me, and that's something that's bad for you. It teaches you bad behavior. So I still think that up makes sense, but do remember that I was all done right about in here. Decay retest, I was like, I think I'm going to be done. I think this is good. And just I'm glad that I did that. So could keep going, could just flatten out to the close. I think the focus is tomorrow, so I still think down makes less sense. I think up into the close makes the most sense, most sensible. But we could even pull up options. Let's take a look at our options here. Actually, I'm going to look at the SPX. Okay, here we go. I'm going to pull up the June. 17 days, so a couple days here. Let's get down. I have all the options on. I know it's insane, but I just to look. All right, so we're scrolling. I'm kind of just taking a look here. I mean, you can see there's on the nice round 29, 29, 50. There's 50. So nice round numbers. Oh, that's interesting. Not much. So you sort of get an idea of where all the orders are from doing. This doesn't look too intense to me. Yes, a little less, a little more sparse. See that? So look, they sort of cool off here. Got some volume right in here in the 3290s. So there's some people looking at that right here. 3200 pile sitting there. No, on this side too. But I'm literally just doing this. So you can see there's a little bit interested, a little bit higher. I like to look at this. Let's take a look at the, yes. Let's look at the 3060 foot. Let's not do so much. Let's do a couple days, Wednesday. 3060 put 26 points. Still, well, it's inside the it's inside the days range. So that's good. 26 is still a little high. Oh, look at this. Look at this. Terror. Okay, so this is interesting. Getting this down, so a little push there happened here. Now, this is gutsy. Again, you can only see a little bit there. Let's give that a minute. This is not 18, so we got that the 20. So maybe some activity coming in from that, crossing that 20. We're still at 16. I still disagree. But push that. I don't think we're going to be able to reach this. I don't think this is happening. Not in 45 minutes. Well, maybe. Not down. You can't push down. You let the bears out. You totally make a mess of the whole. No. That's it's almost like okay. This is how I'm seeing it. It's like okay, let's push and see if we could get this moving in a way that we can sample here, and then it's like oh no, no, because we push. It's like too much pressure down there is simultaneously trying to let the bears out. So it's like no, having a hard time getting it down there because of those bears that are there. If there's too much push, it'll curl it down and let those bears out. It's almost like that's what's happening here. If those bulls want a little more liquidity, the cost would be letting the bears out almost. Yeah. Letting those bears out, which means that the upside potential gets completely reduced because those bears would be free. We won't be able to liquidate, but it's not going to sample the bulls in the close. Nope. Dollars basically down again. So money's moving. It's part of this whole situation. That money's moving. Oh wait, hold on. What? Yes? Oh, you want me to be quiet? I'm supposed to make noise. Huh? It is the it is. Okay. See that another jab at that about that cash average there that I'm thinking 30.53. And it gets under there and I think it's just having a hard time staying down there. It's gotta pay out to those guys who doubled down. I think that was the wrong choice. It's not going to do. So we do have market outside the value area right there. Whoops. While that dip was scary, it doesn't change my opinion. Look at that. I mean, look at this. You can see them, right? One there. It's like a little bit. So these like moves down are having this impact. Like the sellers are coming in. That's the second one. I mean, you can kind of see. It's not that it's like a big. It's there. You can see it. Man. Either way, still 40. We'll get to 45 open. Did this push up, we could open right back here again tomorrow, get tension down a little bit, get that started off. I think if the bears don't get liquidated into the close today, they will. I don't think this is going to hold until this. It's just the longer they sit sideways, see, the longer nothing, the longer we don't get the action. It just continually gives advantage to the bulls. It's not sensible. I mean, it's just the longer you wait, the more that these bears are going to say, unwind, unwind. At some point, they'll hit the breaking point. Oh. Okay. I think it's just gonna be capitulation into the close, and I'd love to see the tick pushing you. Love to see the tick pushing you. 133. That so it'll happen to one bar. Jim, I see what you're seeing. I think you know what I think's gonna happen. I'm still looking up. I still think up. This looks up. I don't think that these were good choices by the Bears. And I do know a lot of people would just hate that. Another leg up. That'd be just about 3 out of that low. It's just waiting. There's not much else to look at. We talked about elasticity for tomorrow. We looked over the possibility of sampling bulls, which has lost its viability. It's too far. I think it'd close. I mean, unless something crazy happens. Looked over why the Bears are doing what they're doing and maybe some explanation for this behavior that we're seeing, which is they see something, they're cheating again. And it looks like this isn't going to go as great as it did last couple times they tried to do this. The dollar cost average, there's just the longer they sit here, the more the more the bears are probably going to want to start to cover, and the buyers. I think that this makes sense. Just like Berger says. Can't do that with my fingers. No, I got it. It was up. But I think that's the back of a hand. I feel like this is a curse word. Up, 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 up. It just makes sense. I think this is the most sense. It's just rational. I don't think down is rational. I think that'd be nuts. It would be a huge structural problem. Be like the Bulls couldn't pull off awesomeness after pulling it off. What's wrong with these folks? Kids in their games. Okay, sure. There you go. You're welcome. Just waiting. Just waiting. Just waiting for this to happen. Gonna happen. Look at that. The the velocity got right under 20 there, right under the plus 20 level. Seeing we're at 23 already. It's like people just did stuff. Like, why? Why'd you do stuff? I was at 20, so I did stuff. It was in the algorithm. What algorithm? I don't know. The one that says 20 buy sell. Okay. And they did. You can see that. I think that's what it was. It was just people doing stuff. Anyway, we're just waiting. Man, it'd be if we could get that tick right into close, we get the tick to clear out all the highs above. I'd be like great, because to me that's just like a bow. We got the present right. We got the meat and potatoes here, but getting this to shoot up and that would just be the bow on the top. Is this a bow? It looks like an 8. There's the bow on the top of. That doesn't make any sense, but you get. It'll be the bow on the top of a present. Not that we'll move up to see the tick clear before the close. And by clear, I mean see the tick value. Just make sure you see the tick value come up and push this level. And see this come up, and you'll see this yellow line cut and hit right here. Since it's 991, it'll be something like 1,000. It'll move. And be like, all right, that cleared. And that would be great. I'd be really happy about that, because then it would be just a bow. Everything was nice and neat and put together into the close, and it'd be done. Yeah. So good. I see oils continue to truck along. People keep driving their cars, because of course they are. $53. We're gonna do this again. We've seen this here, we've seen it here, and we're doing it again here. It's like dedicated. incredible, dedicated. Keep trying so hard. Dollar cost average position. Oh, maybe I'll put it there. Duplicate it. Let's see the 53. That was, that was just me guesstimating. I don't actually know if that's the dollar cost average. It's where I think it would likely be in that area. That's why I picked it. So, he keeps trying to get under there, and I think what the market's doing is being like, whoa, stop paying those guys. Stop, knock it off. They're the loser. Let the losers. Whoa, what? People picking up the ZM? Wait. You watching ZM? Why am I watching the ZS? Is that a better one to watch? I don't know. One's futures. The ZM's the soybean meal futures. Which one's better? I don't know which one to watch, but I was watching the soy, the ZS. That's my inside. Oh, okay, that changed everything. Man, I just think in futures. Zoom. I didn't even know. I didn't even know they were public. Oh my gosh, you could do this all day and just learn new things. Can't believe I didn't know that. Okay, let's check it out. I'm gonna bring it up if it'll load. At this point in the day, with all these events going on, I have a feeling that this is gonna hate. See if we can get it to load. Why are people buying Zoom? Or are everyone's already using it? Maybe they're going. Maybe they're getting bigger, like global or something. Yeah, but now, like, is the market trying to say something like more people are going to be signing up, or is it just they coming into like an earnings? It's trying to get in front of earnings or something. Dude, Zoom hit a home run back when they picked up being the main communication device for Walmart, and they replaced Cisco or whatever. And then just after that, they got quarantined. They've just been, it's like grand slam after grand slam. Maybe that's what it is. Everyone's anticipating huge earnings. Big, huge earnings. Oh, it's still loading. My platform hates me for this. I hope so. I think that a buyback in June. Well, if you're talking about the SASS stocks, I think the market's going to be looking at that kind of thing anyway. I think it makes sense. This is just hanging out. I think maybe it's just, we got this whole situation here, and I don't know, last 20, 25 minutes is the question here are these, how's this going to look? The bears do nothing in the close. I think it's just going to accelerate upside after. It's not going to make a difference. You'd think that people would start to unwind their sell positions, like create that long demand, unless they know something. Do I not know something? Am I missing something? That's still in the back of my head until this takes them out. I'm like, am I missing? Do they know something that I don't know? And it gave it another go under the 53. Uh, it's too bad. This should get dumber and dumber as day goes on. Another dip down. In the YS? Let's see. I saw that post. I actually know who that is. Oh, now I know why. Non-commercial positions in the S&P 500 E-minis. That's not real time. You can't get that in real time. You remember, did you see the post the day somebody was posting about Twitter? And that the day after, or the day of, I think it's the day of or the day after riots, it was the most sad day ever on Twitter. And I'm sitting here going, interesting. Super short positioning. And the saddest day on Twitter. Gizmodo, come on. Leaving the World Health Organization isn't so we can leave. Just want them to stop listening to China. Okay, so 3051, we're under. We're like looking at that cash average level into the close. And so I'm sitting here thinking, what am I missing? Because I mean, you could see, right? You could see what's happening. Like we got stuff up here. We can do this. Getting down to 30, 50, 25. There is trouble afoot. $20 minutes. Think you can do that in 20 minutes? It gets down to 1300. A bullish sample into the close. And it wouldn't take that many stocks to do. Bullish sample right into the close would be horrible and awesome. It's going to need to pick up the pace. That's pretty aggressive though. 20 minutes. You could see like if you just sort of follow the line, see a little acceleration. Oh, price could come down pretty good. Give us a bullish sample right into the close, irritate everyone, including me. Get that sample just at the close. Get the bears are. I mean, I don't know what if the bears aren't dumping their positions. They're dumb as a sack of rocks, unless there's something coming. Cheap. That decay retest is holding together better than I anticipated. I don't think that would be. Okay, so I'm thinking about if we have velocity come down here, right there, right? That's gonna look like this. Not quite like it's gonna be. It would have to be aggressive. I don't think you can pull it. I'm gonna get that in 15 minutes. The ghost of the 50 sweep is coming. You think there's a ghost? That'd be. I mean, look at this. You have a stop here, stopped out. Stop here, stopped out. Stop here, stopped out. This is just churning the crap out of the bulls. The bears are just, I mean, yeah, they got stopped, sure, but this group here's didn't get it. This group here didn't get it. This group here didn't get it. And under this precedent, tisk tisk. Oh, I just oh, you probably see that too, Jim. The Smith and Wesson stock is through the roof. Well, it's just up a lot. Through the roof. They ain't no $200 stock, but I suppose it's not really funny, but it's sort of funny. Why do I think that's funny? 6 minutes till Burger's 50 sweep. That's 6 minutes. 6 minutes. I'm on the edge of my seat here. Just a second, gotta tell somebody something. Okay, I also found a donut on the way. Just over there. Okay. Look at that. This is interesting. This is interesting. You see, we had that right there. Some impact. We're having some impact here. Yeah, on many traders' memories or any AI pattern seekers, they'll remember that and they'll try and front run it, and then it becomes like a self-fulfilling prophecy. You know, like they're all doing it together, and so it looks like it's still happening, but just because they're all trying to take advantage of it. Well, we got about to here, and looking at version numbers, still there. It's just making us work for it. It's just making us work for it. I can work for it. There's a lot of flexibility for those bears. And it looks, maybe it's just me, but like these pumps down look algorithmic. Like here, 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 the way they sort of sweep down, and then seeing how it's impacted tension with timer 2 looks not like I thought they would have. Something. What is it? What do they think they know? No dice. I did not think we'd be moving down. Why you gotta do this to me? Well, last 15 minutes, this won't come down. Interesting, tomorrow, we're real close. So even open a flat, even a gap up. Let's say the market opened up here and we open with plus 800. That's still going to make velocity sample. So we could still see a gap up and have a sample long at the open with these numbers, because just a move up's not going to cause 1600 again. Right at the open, we could see 800 or something in that, or we could just open flat and we'll see a bullish sample right at the open. So this could be a really fast-paced morning tomorrow. If the objective here is elasticity, and we have set up a bullish sample right at the morning, right in the morning, right off the open, and the bulls do nothing off the open, this elasticity could get going just immediately. And then the bears would want to grab up a sample here, possibly decay rises a little bit, right? Something like this. And then you see price kind of do this thing, and then not that it's going to drop, but that it's going to start moving this direction, and then the goal will be here. And it looks like that's getting set up. I mean, even if this moved up into the close or flat or down, we're going to have velocity sitting here at this number where a flat open could give us a sample. And that's interesting. I think that's really interesting. That means tomorrow morning could be really fast. First 15, 20 minutes could establish the way the whole mark goes. Okay, here's the 50. Let's see the memory, the market memory. That's not too bad. Guess there's more to it. A point or two. Skipped a couple ticks. The murder algo. Hello, murder algo. So I think that this has, more than anything, we're set up so that tomorrow morning we could get this going quickly. It would take a lot. I mean, we'd need advanced decline to open at these numbers again or higher to keep this going, which means that tomorrow morning a gap a pretty significant gap up and a move in that direction because we'd need like 1600 on the advanced decline up to, I don't know, 1800 or more. So if that doesn't happen, the bulls will get sampled off the open. I think that's going to be those crafty bears. That would be the perfect spot for the bulls to step aside and the bears could grab up liquidity in the first 20, 30 minutes and try for elasticity. It doesn't mean they're going to get it. But the fact that we've gotten so close here,
right?
That's interesting to me. This is going to be a quick morning tomorrow. So you have to be here right at the open to see it. This is like leaned into just as close as it can get. It went, I thought the cash average made sense. It looks like it came back trying to get to the backside of this position here, the one that the bears are trapped in. I was thinking the cash average was there. Push through it, which sadly could limit the upside potential. When you push down, you let the trapped party unwind some of their position, especially at a profit like that. You run into problems where you limit your potential to run through and liquidate them the way you'd like to. So we're getting probably the last couple minutes sideways close. Something in here. And then we'll see. The next event that's going to interest me is going to be this sample. I think that's going to be right. My handwriting is like a child. Right at the open. So that's the thing to watch for my opinion. If the bulls step out of the way, they're like, no, we don't really want to deal with that. Bears are going to hop in, and this will be the day tomorrow. This whole like just head down to zero concept. We were letting those bears out lets me think that that's on the minds. That's what people are thinking right now, and that they were pushing down and able to unleverage some of their position. You see that with tension. They're able to get it through and unleverage a little position, though the root position right here doesn't seem to have been taken out. Inversion still in place. We'll see. 7 minutes left. Who knows? It could shoot up. Personally, at this point, I don't think it matters. I was focused on, this kind of thing, the sideways to up. I thought, I still think it makes sense. I still don't think moving down makes sense. It's crazy. It's crazy. It's not just like going for it. But I didn't think we'd get back and retest this position. I was thinking the cash average. Okay. Not amazing. Anyway, that decay retest right here, you could see. They grabbed up the first one. We didn't get the wide short. We just got the wide hit in there. We got our lows in. That decay retest ended up pulled together and has been the driving force for this whole thing to pressure the downside. So be ready tomorrow morning. I think it's going to move quick. This morning was actually pretty quick, but I think this morning was it just continued. It was just a continuous from yesterday. Trying to get to where we need to go. So that's what I'm thinking. Five minutes. This is where we see. post close. That's what it's looking. That's what I'm thinking. I still think there's a pile up there. I'm gonna close the market, pop it up. I just thought intraday would be great. Get that out of the way. Either way is fine. I just put it the other way. 4 minutes. This could take a while. I don't think I'm gonna stick around. I'll post about how it ends. It just looks to me like get ourselves a sideways close. You know, a couple minutes before the ES closes, and then there's the initial the ACH. I'll send the funds, and then the ES will close a little bit after that for a while, and it could be after that that moves. It's hard to tell. This could take a bit, but I'm gonna wait. A couple minutes. I mean, I'm not gonna wait after the close. Once it closes, I think we're done. I hope this was useful. If it was useful to you, let me know. If you hated it, let me know. If you stuck around for the whole thing, cool. That's a lot of rambling. If you stuck around for even most of it, I rambled. I can ram. I rammed. Hope this was useful and that you guys are getting a better understanding of how I'm using the tools, and that it's clearing up fuzzy clouds and mental blocks and stuff like that. And that it was clear. If I'm not being clear, please tell me. I used to rely on Joe for that. He hasn't told me I'm not clear in a long time, and I wonder if he's still. Well, it's just a lot of rambling. Really, this is a practice on how well I can talk for 6.5 hours. Yeah. Hey, you guys are great. Thanks. Well, I'm glad it's helpful and that it's. Stop. I did not. Okay, so hopefully you guys see where we're at tomorrow. Elasticity in the morning. If you have questions about something I did or said, I'm gonna have to listen to the video, figure out what you guys are talking about, and fix it. Shoot me messages, Twitter, Discord. The YouTube chat's only up when the YouTube streaming, so don't use that during the night. Yeah, I'll see you guys in the morning. Adios.